Okay, let's start this over because I'm always muting myself and not unmuting myself. Welcome, guys, to Forex Fridays with Deontay. We're going to go through a few topics today. As always, hope you and your loved ones are safe wherever you are in the world. It's currently now 9:08 p.m. here in New York. So many people ask me, where do you live, Deontay? I live in New York, and I was born and raised here. I'm not sure where it is where you live because I know some people are just waking up or either just getting out of work or just getting out of school. But I do appreciate your time, and I'm definitely gonna try and bring you the best quality information every single time at Friday. Friday night, especially dudes. And I know Forex community is mainly males, predominantly. Dominated by males. We could be out doing other things. Chasing after women. Going to clubs, drinking our life away, smoking our life away. Doing things that we shouldn't be doing. But instead, I'm here every Friday night. If unless I'm not busy or not, every Friday night we're here, right? Whether it's 8 p.m. or 9 p.m. New York Eastern Standard Time, I'm here and we're trying to learn something. We're trying to build a skill. We're trying to develop some type of skill that's going to pay us in the near future. That's the whole point of Forex Fridays, trying to get this education out to as many people as possible in a digestible way. So some of the topics we're going to talk about tonight is going to be from weekly range review, classic. We always do that. We start off with the weekly range review just to get touch on what happened this week, seeing any opportunities that might have presented itself and how we could have gone about it. After that, we're going to talk about small versus large range cycle or the natural range change cycle, according to Larry Williams. And then we're also going to talk about identifying trends. So we're going to sit on identifying trends for a very long time because I really want this part to be crucial and I want it to get out to everybody in the community. How do you identify trends? How can I gain, better anticipation skills, whether or not the market's going to be bullish or bearish? And then we're going to end it off with a smash day candle, another Larry Williams topic, and then we'll jump into Q&A. I do have my other account here in the Zoom chat so I could see the chat room. So if you guys have questions or anything, you could definitely feel free to type it out. And if I do ask you guys a question, I just want to interact with you, get your attention, and have that communication with you one on one, and not make it seem like I'm not reachable or not attainable because all you guys have access to me. I'm not special. I'm definitely not no celebrity. I'm not somebody that's famous or etc. etc. I'm your average 25-year-old dude that lives in New York. Ain't nothing special about me. I just happen to learn how to trade. That's it. So with further ado, we're going to jump into the weekly range review. As always, we love the weekly opening price. Now, why do we love the open weekly price? We love it because it gives us, right? And we're able to conceptualize where overbought and oversold is with no indicators. You will never see indicators on Deontay's chart besides, session indicators to tell me the time zones or the kill zones. Outside of that, you will never see an indicator on my chart because I don't believe in it. Premium here is what happens when price gets above the weekly opening price. So as soon as price gets above that weekly opening price, it's overbought. It's in an overbought condition. Same thing vice versa. When price gets below that weekly opening price, it's in an oversold condition. It's cheap. Now, when I speak about this, I don't want everybody to just take it by face value and think it's every case scenario. The ideal case scenario, right? The pinnacle, right? The top of the top, the cream of the crop. The pinnacle selling opportunity generally and ideally will form in a premium condition above the weekly open, especially if the higher time frame trend is lower, right? It's going to find a selling opportunity in a premium above the weekly opening price or Sunday's opening price. Vice versa, on the flip side, if this market is going to find a great buying opportunity, it's going to most likely or give you or present a buying setup. It's going to likely form in a discount. Now, that's not to say there aren't other scenarios where traders, mainly retail traders, are forced to buy in a premium. We know that because that's the nature of the market. If it's going to continue trending higher, that means there's going to have to be buying in a premium. Vice versa as well. We know that the ideal buying condition is normally going to form at a discount, but there are times where the market does sell in a discount and you're forced to sell in the discount because the market is trending. Just because price comes down into a discount does not mean it's going to have to always buy. Just because price moves into a premium does not mean it has to. It must sell. No, there has to be things that align time, right? Price action, and the week of day, the day of week, correction, the day of week. Those things need to align. And also whether or not we're in a small range or a large range. And those are other things we're going to talk about as we progress through this video. Starting off, we can see that Monday is the low of the week. Just pure hindsight. This is all hindsight. But in order to learn these ideologies and to learn these methodologies, we have to use hindsight. People like to criticize people in this space. Oh, that's hindsight. You're studying hindsight. You're never going to learn. You will learn. Don't listen to people that don't know what they're talking about. You will learn. How else will you learn? With the hindsight that we're granted on this week's, data via 1 hour, I like to look at it on the 1 hour. We can see that the low of the week comes in on Monday. And ever since then, it runs up on Tuesday, makes the high of the week on Tuesday. But to get to here, this high point up here, it came from a discounted territory. It was cheap, and then it ran higher. Vice versa, you can see Tuesday, ever since making this high on Tuesday, it slowly started to decline lower. But notice where it's selling. It's selling in a premium territory. That's just our general observations. We're not trying to over speculate what's going on in the marketplace. We will start to go into each one of these days. But you can see just with general hindsight and plain observations, we can see where they're buying and where they're selling. It's pretty obvious when you put this line on the chart. When you take this off the chart, it almost looks like, I don't know what's going on. But as soon as we put this price on the chart, it's like, wow, night and day almost. It gives us a more concise area when we should be a buyer and when we should be a seller. Looking at Monday, we're going to talk about the London model and we're going to talk about the New York model. Now, many people always ask me questions of how do you find intraday setups? Or how do you go about finding trade ideas? I am telling you here. So let's go into the DXY and we're going to talk about, I believe this is UCAD. Yeah, we're on UCAD. So we're going to look at London and we're going to look at New York on Monday. So let's go down into those time frames. Now, when I like to look at the market, I personally like to look at it from a 15-minute perspective. I love the 15-minute. It gives me very clean buy side and sell side liquidities on the lower time frame. So go down to the 15-minute time frame. And don't forget that this black dashed line here is the weekly opening price. Do not forget about what we were just talking about. Keep this line in mind as we're talking about it. I'm not going to talk about it a lot right now, but keep this line in mind as we're talking about what's going on in the market. What we just said about where to sell and when to buy. The ideal conditions. So let's look at the 15-minute time frame and let's put on the session indicator. So we got our London and we got our New York. So let's start off with our London session. Now the London session model is a pretty straightforward model because I like to keep things simple. And as I've been learning, I don't like to do too much. The more I do, the more confusing things can be. And the more I can be conflicting a lot of ideas. We could look at the market in so many different ways. There's so many opportunities. There's so many scenarios. There's so many very specific niche things that if we were to include everything, we would never get anywhere. And that's the honest truth. If we include every single situation or every single trading idea or every single trading model, we would never win. You need to specialize. And this is my specialization. This is my simplicity to trading London, New York, and Asian session. There is a dead zone before all the kill zones. There's a small window here before London, and we know London, I like to start it at 2 a.m. Some people like to start it at 1 a.m. You can do that as well. I personally have been sticking with 2 a.m. I stick to 2 a.m. to 5 a.m. That's my London session kill zone. Before 2 and 5, we have a dead zone, and that's right between Asian kill zone and London kill zone. So that's what it looks like here. This is Sunday. It's not showing it on the indicator, but this would be highlighted green from 8 p.m. to midnight. It would be highlighted green. And you got 2 a.m. to 5 a.m. That would be highlighted red. Then you have this area here that's not highlighted, that's just shaded white, that is the dead zone. Now, this dead zone is where I'm going to be looking for my liquidity pools to potentially find a turtle soup setup. That's all I look for because that's my lifestyle and that's what makes things simple for me. Now, you don't have to take this approach. Now, if this is something you don't like, hey, disregard it and look past it and look at other models. But this is a very simple idea for beginners, especially those that have no idea where to look first. I'm taking all the buy side liquidity and sell side liquidity that's residing within midnight to 2 a.m. So 12 a.m. Let's write this out so we can see it on the chart. 12 a.m. to 2 a.m. I call this the Asian lunch because it happens right after. It's the Asian lunch. No trading is permitted in this time period, and you're not allowed to trade here, according to my methodology. This is buy side liquidity because there's a swing high formation. This is buy side liquidity as well. Here. This is buy side liquidity as well. Here. All these swing highs. Buy side, buy side, buy side. On the flip side, we don't have any swing lows here. What I like to do in moments like this, in case scenarios like this, when I don't have a clean swing low that's not unbroken, that I can't take, I'm going to take the 215 candle or the lowest low here transcribed on the 2 hour. Sorry, at 2 a.m. Taking this low here. That's that 15-minute candle. So that's, I know it says 2 a.m. here, but technically it's 2:15 that this candle is showing here. Because after this candle finishes closing, it would be 2:15. At this point, I'm looking to see whether or not price is going to break buy side first or sell side first. I do not try to guess which side is going to break. Yes, I can sit here and do a little, fun analogy in my head and speculate it in my head like, oh, I really think it's going to break the low first and then go higher because I think UCAD is bullish or trending higher. So I would like to see something support that idea, break a low and then go higher and continue trending higher, or vice versa. I think UCAD is trending bearish, on a higher time frame. I would speculate that price is going to break some type of buy side and then go short and continue in that higher time frame premise. I'm not trying to force it though. The whole idea of this model is to catch anywhere from 10 to 15 pips. And sometimes this idea can be the turning point or the trending point, a pivotal moment. The same way London makes the low of the day at times when it's bullish, or makes the high of the day when it's bearish, the same thing can happen in New York and Asian session. And then from those sessions, the market can continue trending in that direction from that one setup. And we see it time and time again. Mark off the opening price of the session. This is another week we're showing these simple ideas. Nothing changes. I like consistency. This is London opening price. So we'll mark this one off. Remember, the other one is the weekly opening price. For those that are now joining, this is the weekly opening price, the start of the weekly candle. Let's see what happens when price plays forward. Play it forward. Instantly, you see this candle opens, does get above 2 a.m., and then it shoots down. Notice that. It's funny how it does it. It opens, it runs above 2 a.m., and then it drops. It made sure to get a nice sell up here above 2 a.m. and Sunday's opening price. Very interesting. After that, we can see it comes down, it purges that sell side liquidity pool that we marked off here. Let's go down to the 1 minute. I personally like the 1 minute because I'm looking for something very specific after getting the break of this sell side liquidity here. So right here, 207. That's that sell side liquidity we got there. The lowest point within that 15-minute candle was here, 207. We're now below 2 a.m.'s opening price. Let's zoom out so we can see it. 2 a.m.'s opening price and the weekly opening price. So we're now, and I'm going to ask the chat this, are we overbought or are we oversold according to where we are in price action here on Monday? Anybody in the chat can answer this question. Where price is currently right now, are we in overbought condition or oversold? Correct. We're in an oversold condition. Great. Great answer. Yes, oversold. Should I be looking to be, right? From a ideal perspective, should we be looking to be a buyer or a seller? Anybody can answer this. Should we be looking for buys or should we be looking for sells? Buyer. Yes. We should be a buyer. Sole reason why we're going to be a buyer here is because it's cheap, right? It's a new opportunity for eh, someone said sells. The answer is buy. And you'll see what we're talking about here. We're below 2 a.m.'s opening price and we're below the weekly opening price. No indicators needed to tell us where overbought and oversold is. When price drops below an opening price, so let's say 2 a.m. is the opening price for the kill zone that we're using. That means when price drops below it, it's cheap. It's more beneficial to us as a retail trader to find a buying opportunity here. And it could be very successful as well, right? The probabilities may be increased even more because it's cheap and the market makers are going to want to buy in the best case scenario. They always get the best buys and they always get the best sells. But we want to play just like them. And this is a way to get closer to the truth in moments at time. We don't want to sell while we're down here. Not to say there wouldn't be a sell set up here, but would we be leaning more to be a buyer or a seller? We would lean more to be a buyer, especially with the hindsight data, knowing that, dollar is bullish. Dollar's been bullish in January, dollar's been bullish still going into February. So we're looking at UCAD. So we know that UCAD, if dollar's bullish, most likely we're going to see UCAD being bullish too. So we're looking for buy scenarios. After rating this sell side liquidity point here and pulling itself in an oversold condition, we're looking for an entry opportunity to go long. We're just looking for an opportunity. This opportunity does not mean it is 100% going to be successful. Even when all odds are in your favor, you can still lose. And that's something a lot of traders do not want to take responsibility for. Just because the market can produce many opportunities, there's many different ways we can make money here. There are many ways we can lose money here as well. Even when everything looks like it's hitting for you, the market can take it right away from you. Do not always suspect the best. I normally like to tell traders, expect the worst so that you're taking responsibility. So if you do take a loser, that means you're accountable for the risk you took for that trade. Those that think that their setup is always 100% right, guess what they do? They have no discipline and they don't even care about risk parameters. That's something that's not even thought about because they think they have a I can never lose attitude. And those traders that have a never lose attitude or are very over optimistic about their trade setups, they never care about the risk. They're risking 5%, they're risking 4%, 3%, things that they shouldn't be risking for their account size. And they think that they're Superman, right? Or Superwoman. And they think that no matter what they do, they're always going to be right. But the market is very humbling. So he played out. And what am I looking for? I'm looking for a fair value gap that's going to sweep a swing high formation that forms below 2 a.m.'s opening price. Mainly for the kill zone, 2 a.m. Not because of the weekly. I don't care if if it forms below the weekly, great. But I really want the entry technique to form below 2 a.m.'s opening price. The more confluences, the better. So we're waiting, we're waiting, we're waiting. We don't have any fair value gap that sweeps the swing high. And look, price breaks down even more. Now, many people would say, but Deontay, what about that fair value gap here? Why did you not take this one? Well, look at it. It put me into drawdown. And there's nothing wrong with taking that first fair value gap because I used to do that as well. The very first fair value gap that forms after it's sweeping my liquidity pool that I pointed out, I would take. And sometimes it did produce a great trade. Other times it did not. And you can see in this case scenario, it's not. It's in drawdown. We'll play it forward. So we're still waiting. Still waiting. No entry. No entry. No entry. And then whoop, all of a sudden, what happens here? What happens right here? Fair value gap. Get over here. There. swing high formation. Multiple swing highs too. So you got two. It breaks two swing highs. And the core content, those that have or that are versed in ICT material, core content, we know that this right here, the primer videos, this is what ICT would tell a lot of new traders to look for: speed, right? He didn't call it a fair value gap. He was calling it speed, tomato, tomato. Speed. I'm looking for a price to be one direction for the next three candles. One, two, three. And there we go. We got a fair value gap. Even if this candle were to close down, it would leave a gap in between here. It doesn't fill in this void here. It leaves something open. This one, this fair value gap, is much more niched in to my model of entry. I don't take any fair value gap. Notice here, this fair value gap, price never gets back to it. This fair value gap, price, as of where we are right now currently. Not to say it won't get back down here, but right now it's not there yet. You can see that. Price has not returned back to this fair value gap. So I wouldn't concern myself with these things. But I'm concerning myself with the fair value gap that breaks a swing high formation because I think it's more feasible. With the experience that I have, I believe it's much more feasible. I like to go in with a one-to-one scenario. My ideal stop loss ratio is generally 15 pips for a day trade. Breakaway gap too, as well. My ideal case scenario of a TP and a stop loss for a day trade, 15 pips. You can also do 20. You can even do 30. At times you could do 40, 40 for 40, 30 for 30, 25 for 25, 15 for 15. I like 15 for 15. I think it's just a real good golden sweet spot. Now we wait for what? Price to return back down to that top of that fair value gap. We only take that top part because we don't know if the entire range is going to get filled. Because at times, as you're learning and you progress, you'll notice that sometimes it hits just the top and then runs higher. Other times you see it hits the top and halfway, right? The mean threshold of it, and then it goes higher, right? The equilibrium point, the halfway point of that fair value gap. Or at times it goes up and hits the whole thing, engulfs the whole thing, rebalances this whole zone, and then it goes higher. I'm not trying to get fancy. I'm trying to get into the market, right? I don't make money unless I get in and get my entry. So the closest possible point of entry is the top of that fair value gap, the premium side. As you become more advanced, you can get, more versed with taking multiple entries inside the fair value gap if you would like. But a very simple approach is just take the top portion, right? Institutional order flow entry drill. Everybody should be versed in that. If you study ICT's material, you would use that. Taps it, you're going long. See what happens, right? ICT would say, just see what happens when you enter right there. How much drawdown do you get? How long do you stay into drawdown? Is it immediate response? Is it dynamic? You generally know you got it right when it's very dynamic. Sometimes the market can be a little more lethargic and it can pull you into drawdown, but that's the whole reason why we have a stop loss. We believe that price action is probably going to pull down and give a area of retracement before going higher. Our entry is where we're speculating it should most likely make a turning point in that general area. If it doesn't, we are allowing a basket of risks to occur before price turns back around. So let's see what happens. Remember, we also took out sell side liquidity. What do we have above these swing highs? And I'm asking in the chat, what's above these swing highs based on liquidity? Is it sell side liquidity or buy side liquidity? These swing highs that we talked about, buy side. Thank you. That is buy side liquidity. So after taking out sell side, as a trader, I would ask myself, what do we still have available for London for a feasible idea? Where could the draw be? The short-term draw. Doesn't have to be the long-term draw. The short-term draw. Where could it be to these 15-minute swing highs? When we look at it on the 1 minute transcribed, they're very clean highs. The market likes to take out clean highs. Let's play it forward. Taps it in. Notice how it rebalances the entire fair value gap. There. But that first initial touch, we're long. We play it through. Quickly. Look how quickly we get right back into buy side liquidity. What did we just do there? We purged and reverted. This concept is seen on many other time frames. This ideology is seen on many other time frames. You're just seeing it here on the 1 minute. It's being displayed differently because the same thing happens on the daily time frame. On the high time frames, the same idea of purging and reverting to either side of liquidity pools is happening on all time frames. If we play it through, let's play it all the way through, see what happens at the end. You see, we definitely get 10 pips, so we could scale out at 10 pips, right? You decide what you want to do. Many people ask me, what do I do? At times, what I do does not may not suit well with you. You may not totally agree with me, and I don't mind that. I don't mind that people don't agree with me, but there are a plethora of ways to go about taking profit, moving your stop loss, or trailing. You don't have to make it very complicated. And this is where we are at the end at 2 a.m. So we can see we found a successful entry. Our entry is occurring below 2 a.m. opening price. Now, the way I spoke about this model, I spoke about it from a non-bias model. I'm not using daily bias. I'm not using weekly bias. At times, the higher time frame trend and the bias can lead this to trend even higher, right? The trade can be exacerbated. It could be put into overdrive because the higher time frame trend is saying it's going to trade higher. And if this is the confluence that we're getting of sell side and then running back up, this could be a pivotal moment in time. This could be the low of the week. And we know it is. Monday was the low of the week. In the beginning of the video, we talked about the weekly range. We saw that Monday was the low of the week. And we can see price comes down and then it runs higher. And we'll just play it all the way through. And this is now going into 7 a.m. now. Right? We're going all the way to 7 a.m. And we're going to talk about the New York model as well. But I just want to play this through just so you guys can see. Just hold it a little longer. There it is. TP hit. 15 pips. I know it looks like a lot. Like, dang, whew, that's only 15 pips? Yes, that's only 15 pips. That is only 15 pips out of the market there. On this one trade idea that we found, we could be risking 0.5% of our equity. We could be risking 1% of our equity. We could be risking 2% of our equity. 3%. Anything beyond 3%, very risky, in my opinion. Because anything can happen. Just because we got this set up to be successful, what if it wasn't successful? Would you be comfortable taking that loss, that full loss? If the answer is yes, that means you risk properly and you were responsible about going into this market, understanding that anything can happen at any moment's time. If the answer is no, and you're not comfortable taking that full loss and hitting your stop loss, that means you were not disciplined. That means you were not worried about taking a loser. You were more about winning. You didn't even factor in, could this trade idea lose? And if you take that full loss and you're uncomfortable with it, that can only lead to detrimental things. A losing trade for a retail trader that's not disciplined, that can spiral into something really traumatic. You easily get into revenge trading. And then you can't control yourself. I can't stop you. Deontay is not going to sit there and hold your hand and say, yo, my boy, you need to stop trading. I'm not going to tell you that because I don't live with you. And even if I did, I wouldn't tell you. I would tell you, hey, it's your account. Do as you please. But I do recommend you, hey, maybe take it easy next time. Maybe risk less next time so that you don't fall into these habits. The only reason people start getting into these little habits or sprawling it out, or going into a spiral of these things is because of a cue, right? You start to learn these things, right? I'm a psych major. Something is cueing you to do this. How did we get to the designated result of taking 20 trades and blowing our account? Well, let's reverse engineer it. Where did it all start from? Something cued you in your mind to revenge trade. And most times than not, it's you taking the route of I can't lose and not taking the accountability of anything can happen in this market. I don't care how good of a trader you are. Anything can happen. Nobody is free of losing here. Nobody is 100% correct. If anything, they're 1% wrong. And if they're wrong, they're wrong. It's still 1%. It's still wrong. So you got to consider those things. But notice how this idea that we just showed again, very simple idea. I know it's not the common idea that you're seeing everybody post on Twitter or post on Instagram or post on this. It's a little different. And I know other traders trade just like this too. It's a turtle soup, guys. That's what I am as a day trader. I'm a turtle soup trader. I don't really look for too much. I don't want to use too much brain power. I'm in, I'm out. I'm in, I'm out. I'm done. If I take the loss, I take the loss. It doesn't bother me. Why? Because I know I risk properly. You take that loss and it doesn't sit well with you, you got to do some thinking. Let's get into the New York model. So the New York model is very similar. We're looking at a dead zone. It's from 5 a.m. to 7 a.m. So we'll keep this on the chart for now. I don't like when it starts to get messy, but hey, what you gonna do? That's the weekly open. Play this forward. This is 7 a.m.'s opening price. That's New York open, 7 a.m. Same ideology here. Anything above is a premium, anything below is discount. Let's go on the 15-minute time frame because that's where we're going to get our liquidity pools. I like to find mines on the 15-minute. You can use the 5-minute as well, right? To get a little more data. You can use the 5-minute too. I like to use the 15-minute. So between here, 5 a.m. to 7 a.m., what do I call this time period? I call it the London lunch, 7 a.m. And this is London lunch. No trading should be permitted here. I just recommend you not to trade it. If you aren't already in a trade idea from London kill zone going into New York, don't look for a trade idea because you're going to run into consolidation. All these dead zones I've been pointing out to traders over and over again last year, the last 2 years, the last 3 years. I've been saying this over and over again. You cannot trade at any point in time during the day, even when you are close in proximity to the kill zones. 5 a.m. and 7 a.m., you're going to run into consolidation. 12 a.m. to 2 a.m., you're going to run in consolidation. The market is more likely to consolidate between these kill zones. You can see it here in the chart. Look at it. Consolidation. Then London opens, and then it starts to gyrate. Then it starts to gyrate and move. Then again, 5 to 7, it starts consolidating again. You have to be informed about these things. And I know many people may not have this information given to them when they first started trading. I wish I knew this stuff when I first started trading. It would have saved me a lot of heartache and a lot of crying and a lot of, moments and times where I'm like, I'm just going to give up. I'm not going to trade anymore. But you got to go through those moments. That's just how it goes. 5 to 7. Swing low here. What's that? Sell side liquidity. Here again. What's that? Sell side liquidity. Got a question in the chat. For the Asian session, yen cross is best. Can you advise us pairs? All the majors. Simple answer. All the majors. Even the yen crosses too. All your majors. UCAD, USwissy, EU, AU, GU, NU, all the majors. All the majors. Or even the minors too. Do your due diligence though. Don't take Deontay's word for it. Deontay said it, so it has to be true. No, it's not true. It's only true until you take your time to study it. Swing high. So we got our buy side liquidity and we got our sell side liquidity. We got it just before 7 a.m. right here. Go down to the 1 minute. Now we're seeing that data transcribed on the 1 minute. So we can see the relatively equal highs, the double tops, the clean highs, the clean lows. We see all that stuff. Now we're focused on this side of the chart. Now, let's get this out here in here. Everything I say, don't take it 100%. Take it with a grain of salt and go research it. Did that model really come true, or is Deontay just lying? Is this model really feasible, or is Deontay really lying? Go check it out. Is the Asian session really working? Many people would used to ask me that all the time. Is this guy really telling the truth? Is it really that consistent? Then I had to make the library to prove people that it does happen very often. That's just how it goes. People don't believe you until you show it to them consistently. I've been trying to do that here. 7 a.m. Now we're waiting. We're not trying to jump the gun. Yes, it is fun to guess and speculate which way it's going to go. But I don't like to do that at the beginning of the kill zone. The reason why is because I feel like at the beginning, that's where everybody is focused on. All the retail traders are just sitting there waiting at the gate line, waiting for the gate to open. And as soon as 7 a.m. opens, they're sprinting super hard. Okay, it's going down. I need to sell. Oh, it's going up. I need to buy. That is randomness. That is all randomness. We just want to see which side it's going to break first. So we play it forward, trying to see what happens. Buy side is broken. Look at that. Buy side is broken first, not the sell side. Where are we according to where price is? Now I'm asking the chat. Are we in an overbought condition for the kill zone? Yes or no? Are we in overbought territory where price is right now, where you see on the screen, is an overbought? Yes. Great. Yes. Overbought. Yes, absolutely. And second question. Are we in an overbought condition for the weekly range? Yes or no? Are we overbought for the weekly range? Yes. Good answer. You're on your P's and Q's. I see you. Good job. Yes. We're overbought. Why are we overbought? Because we're above the weekly open. This is Sunday's opening price. Great. So we have that in mind. Awesome. Let's play it forward. Now, at this point, I'm looking for that same entry technique. It hasn't changed. People keep asking me, do you have another entry technique? No, I don't. Yes, I can take other ones that I know of, but why do it if I'm just so simplistic and I'm trying to keep it as simple as possible? I'm not looking for a breaker. I'm not looking for the mitigation block. I'm not looking for the volume imbalance. I'm not looking for what other PD array that other people think that I'm looking for. I'm just not looking for it. I'm a very simple dude when it comes to trading. There's nothing that I'm hiding to you guys. The entry has always been the same for me. I'm looking for a fair value gap that breaks a swing low. Let's keep playing it until we get one. Do we get any? We do. Played it so far out. Let's play it back right here. Make sure we have this line in context. That's 7 a.m. That's the 15-minute buy side liquidity pools. This is a swing low formation. Let's make this black. This is the fair value gap. There it is. That swing low formation. 1, 2, 3. It's broken with this speed to the downside. What are we looking for here? We're looking for price to return back into this fair value gap and go short. That's what we're looking for. You want to see price return back inside this fair value gap and go short. Same levels as well. 15 pips, 15 pips. Done. One-to-one scenario. That's what I'm looking for. Let's see if we get that trade idea based on the parameters here. Let's play it forward. Because we can even see price comes down back below 7 a.m. I'm still waiting for this price to return back to my entry. I will still wait for that. I'm not going to say, oh, just because it crosses back over, it's done. Because price could return back into it and then give us a selling opportunity as well. You can even see here, just as a bonus, see the same thing happen again here. 1, 2, 3. Look at this fair value gap here. There's a fair value gap. Let's hide this real quick. There's a fair value gap here and a swing low. That fair value gap runs through that swing low. Same thing's happening there. Just as this entry technique would be much higher than this entry technique. And if you're selling, you want to sell at the highest price possible. It's just more rewarding. Play it forward. See price trades into it, right? Trades right into it. We go into drawdown. And that's not something we are confused about or we're worried about. We don't get nervous here, right? We don't get cold feet. We're not gonna say, "Oh, we're gonna abandon the trade. I'm getting out the trade." You're never gonna win if you keep doing that. You gotta hold it through. As you advance and you get more experience, you will start to respond to the trades and the way the price action is moving and the way you're looking at other intermarket analysis. You will start to respond to things, right? And looking at the news and the day of the week it is, you'll probably say, I don't know, the way the trade is going right now, other things are showing me that the sell setup might not be ideal. Let me get out of it. And sometimes you will be right and your gut feeling will be right and you will save yourself that full loss, you know, and you cut the losses as early as possible. You still take a loss, or maybe you're in profit and you just get out early because you think it's going to turn around. You save yourself the trouble. At times, it is really a good thing to do. Other times, it may not be. If a swing high broken but a fair value gap in the daily, should we look for the entry? We'll talk about that later. I can't jump to the daily right now. We're talking about 1 minute time frames. What if there's news in the? We'll talk about that too. These are great questions. These are great questions. I've answered these before, and I don't mind answering these again. All the questions that people have, it's all on the channel. I'm telling you, you just have to comb through it to see it. Price comes up, right, and we'll take this. We don't mind because we're going to be risking properly, right? We don't mind the drawdown. We're not super concerned about that. And look at that, boom. It looks like magic almost, man. It almost looks like magic. I love this thing, man. I love trading. Like I really love trading. I don't get it right, right? I'm not, and then when I say get it right, I'm not talking about price as in price hits it and then it goes down. It feels good and clean, right? When it hits your PD array and it reacts really fast and it's dynamic and it runs off. I love that. It's a great, sweet feeling. But I do know that the market is not always going to give me what I want. That's not reality. You're living in a fantasy if you think that it's always going to do that for you. What it will do for you, though, is set you up to be in the right position to take the less risk as possible. This may not be the best selling opportunity, but it's the selling opportunity that I took and a premium above 7 a.m. and the weekly open. It's still a great ideal sell setup. It may not be this up here, you know, and then that drop down here. There may be other models and tools to catch that, but that's not what we're talking about here. Because, like I said, we could talk about 50,000 models. You're going to sit here and be confused all day. You're never going to make up your mind as a trader. You're going to sit here and just be lost in the sauce. Overload with information. You think knowing everything about the market is going to make you successful? You are wrong. You're going to drive yourself crazy every time. Some things don't need an explanation. As traders, we're looking for explanation for everything. Oh, it's because the news did it. Oh, it's because it's Tuesday. Oh, it's because Fed Chairman Powell raised the rates. We're looking for some type of explanation to justify why we lost or won. At times, that may not be the case, right? If we actually were able to sit down with the market makers, not to say there is a real market maker, but let's just think, right? If we're able to meet the creator of the market and the market maker told you, actually, the market did it because of this specifically, you would be like, dang, I got it wrong. Dang, I thought it did it because of this. We don't know. We don't really know. We're trying to get as close as possible to the truth. Who's to know who's right and wrong, right? Who's to know who's right and wrong? But we know that people are trying to get as close as possible to the truth. And I believe this is it. The opening price, selling in a premium, buying in a discount, understanding your liquidity pools, framing it up. How did I frame this idea? I framed it with buy side and sell side on the 15-minute time frame. Then I dropped down to the 1 minute. Took me a while to start understanding. I don't need to know everything about the market to be successful. The news is the excuse. Just to tell you, by the way, the news is the excuse to move the price action. As you start to learn and you progress with your experiences in time, you start to notice that either the news event Two scenarios. I say this all the time. News events, high to medium impact news events are going to generally give you two scenarios from the marketplace, right? The market makers are going to give you two options. When you roll the dice, these are two things that it can land on or flip the coin on. It's going to be very volatile, and it's only going to be a smokescreen. Pay attention and listen carefully to what I'm saying because it goes over a lot of people's heads. It's a very simple thing to grasp. The news event is the excuse to move the price action to be a smokescreen to get retail traders on the wrong side. Point blank, period. Period. When that news event drops, you get those large candles in one direction. Just large, 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 large. What do you think people are doing? What do you think people that are unskilled and untrained and undisciplined are doing? Buy, 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 buy. Sell, 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 sell. No self-discipline. Chasing price. They're not analyzing it. Some people come up win, some people come up with a win and they win big, but most people are coming up wrong because what if price now reverses on them in the next 5 minutes after that news has dropped? Reverses dramatically, right? That's another scenario. Reverses completely and then just drop. Let's say it shoots up. For example, let me just draw it on the chart. Say the news drops, it shoots up really fast. News drops, it shoots all the way up here. Everybody starts chasing it. But then all of a sudden it reverses and it just dumps and it continues to sell off. The news got everybody on the wrong side. Another scenario that the news can do. The news can be setting up for a higher time frame move. It's going to leave a lower time frame fingerprint for you to catch the trend. That's another scenario. It is going to raid, let's say, a liquidity pool, right? That first scenario, it's raiding a liquidity pool really quickly and then reversing. That's one scenario. It's going to move up, raid the liquidity pool, and still support chasing higher price action or targeting higher liquidity pools. It's going to leave some type of fingerprint. It's going to leave something along the lines in that extension higher. It's going to trade right back into it. Might be a dynamic response away from it. Might trade into it, consolidate a bit, consolidate. You already know retail traders are doing what? They're losing their mind because they don't really know what to do in a consolidation. They're losing their mind, and then it takes off again. Those are two case scenarios that news is going to do. So that's your New York model, your very simplistic turtle soup New York model. Purge, revert. Vice versa with this. Purge, revert. Wow. I don't see the complexity to this at all. I see simplicity. I'm not telling you it's going to happen every single day. But if you stick to it every single day, you're bound to find winners. You're bound to find winners because you know it's a scenario the market's going to print. Now, it all depends on the pair as well. This is where you have to do your information and due diligence. I can't do it for you, folks. I can't. I can only do so much. I'm one person. I'm one man. I'm one dude. I am one trader. I cannot track 50 pairs at a time and tell you all the information. I wish I could. I wish I could, right? In a perfect world, I wish I could do that for you. But in a perfect world, it ain't happening, for me at least. I got other things to do. You need to figure out whether or not UCAD is a very good pair for this model, New York or London, right? You need to figure out if GU responds well to the model. You need to figure out EU responds well to the model. It's up to you. Look at how I did the Asian session model. I figured out that UJ tends to be really good with it, and I like it. Could there be another yen cross that's even better than that? Yes, it could be. AJ might be better. GJ might be better. But have I done the research to do it? No. I've only been researching UJ, and I like the results that I've been getting, so I'm sticking with UJ. You got to do the same. So when people ask me questions like that, I can only give you such a vague answer because I don't even trade London and New York like that personally. I don't even have time to do that. You know what I like more than trading? Sleeping. I love to sleep. I want to make my money quick. I'm in and out. People don't sit here, you know, the people that are millionaires, people that are really financially well off when they're trying to make an investment. You think they're gonna waste their time? Time is money. On to the next. Is this opportunity gonna make me money? Yes or no? If it's no, see you later. I don't want to talk to you. These are what these people do, right? We're having a meeting. The meeting is not gonna be 5 hours long. The meetings we're gonna talk to investors. The meeting might be 30 minutes to an hour. You know, might be at brunch or whatever, over dinner, whatever the case may be. Within that meeting, we're getting right down to the meat and potatoes. Are you gonna make me money? Yes or no? If it's no, get out my house. I don't want to talk to you. Next. Yes, we can go play golf. We can play basketball. We could do something else. But if it ain't about money, I'm not talking to you. You got to be the same way when it comes to this too. You got to put the time in. Got to put the time in. And now we're going to talk about Friday. So we got Friday. Friday also had a New York model. So let's talk about Friday. 15-minute time frame. Let's go down. People keep telling me, Deontay, when did you talk about the model? Hey, you're just not here. I don't know what to tell you. I post the videos. I don't know what to tell you. I try to tell people simplicity at its best. People are doing too much, bro. Doing too much. Stop looking at everybody and what they're doing. What do you see? Took me years to see this stuff. I was getting closer to the truth. Every year I always knew there was something there. I was like, I see something. But I don't know what it is yet. I gotta keep chipping away at it. Chip away, chip away, chip away, chip away, chip away. Finally, I start sculpting the model out. Okay, now I see the nose, right? I see the eyes. I see the legs. I see the calf. I see the shoulders. I see the heart. I start to see the model slowly but surely, right? I start to see the liquidity pools. I start to see the entry. I start to see where it's forming, above or below midnight opening price, right? And we didn't even talk about midnight opening price in the last two examples. It's the same thing. Nothing changes. Simplicity, guys. You're doing too much. You're worried. You're so worried. You're like, what about this? What about that? Take a breath, my friend. Everything's going to be okay. Romeo vibes. 15-minute time frame. What are we looking for? Buy side and sell side liquidity before 7 a.m. Yeah, y'all crazy. Chat got me. Yo, I'm gonna hold this together. I ain't gonna go cracking up. Hey, call it what you want to call it, man. Low blow, whatever. All right. So here, sell side liquidity. Here. Nah, you guys are funny, man. You got some comedians in the chat. All right. So where are we before we go into this? Where are we relatively to the weekly opening price? Are we in a premium? Or are we in a discount? I'm gonna see if yes. There we go. See, people are paying attention. Good job, Christian. Excellent. We're in a premium. Correct. We're in a premium. We're above weekly opening price. That's 5 a.m. No? Oh, you're correct. That is 5 a.m. See, I'm not perfect. Shout out to you. So we don't need this. We don't need to see y'all distracting me with the jokes. See? Y'all need to stop, man. Let me focus. All right. So we got our buy side liquidity and we got our sell side liquidity. Also, once again, what time period is this? Where's 5? Where's 5? Where's 5? See, look, I'm off my game already. You got me marking out all this. That's not even a part of it. 5 a.m. Let's focus up. 5 a.m., 7 a.m. That's dead zone. What is this dead zone? Can somebody tell me the name of this dead zone from 5 a.m. to 7 a.m.? Anybody in the chat? Give you a few seconds. London. Yep, London lunch. Good job. Good job, guys. So London lunch from 5 a.m. to 7 a.m. You're most likely going to be faced with a phase of accumulation or some type of consolidation. Not saying it's going to happen every single time, but the fact that I notice statistically, right, over a large span of data, odds are between 5 and 7 a.m., the market will stall. And the fact that it would even roll the dice or land on that side of the coin to give me consolidation, I'm going to avoid it. Not even going to trade. But this, we start to trade because it's a live session. This is the New York Open. We know that as 7 a.m. to 10 a.m., the kill zone. Tomato. I say session because that's the only time. Some people get a little butthurt when I say, "Oh, it's not called a session. It's called the kill zone." It's the same thing, man. This is the open. We can't take any lows here because it's already been broken. So what we do, we take the lowest low of the session. We take that 715 candle. So we see what happens. Let's play it forward. Play it forward. Price comes down, right? Takes out the 7 a.m. Takes out 715 low. Let's go on the 1 minute. So at this point, we're stalking. We're below 7 a.m.'s opening price. You see that there? We just took out that lowest point that was made between 7 a.m. to 7:15. The lowest point was 7:09. So we're taking that as our liquidity pool there. That swing low. Let's see if there's going to be a buy setup opportunity here. Now, I do know we're above the weekly opening price, but just follow along. I know we're above the weekly opening price. Let's play it forward. Zoom in here. Instantly, you can see here. There goes that fair value gap here. It's forming below 7 a.m.'s opening price, and it's running through a swing high formation. So that could be a buying opportunity here. You can see price does get close to it. Also made another fair value gap here. Close that one in and then runs higher. Leaves this one open. And price runs up back into a premium. So just looking at the way it's forming, look at how methodical it is, right? It's purposeful. It's not random. It did this on purpose. Boom. It did it right below 7 a.m.'s opening price. Sometimes it's just very slight. It's just like a small tap and then it's gone. And you get no opportunity. And those days suck. And it is what it is. But when it's down there for quite some time, it's what is it doing? It's accumulating orders. It's getting people to sell. And it is also on the flip side, some people are buying, right? And sooner or later, the market is going to choose a winner. Because when there's a buyer, there's a seller. And when there's a seller, there's a buyer. That means there's going to be one winner per trade. And there's going to be one loser per trade. Someone's got to be a counterparty. Let's keep playing it out. Boom, we get up to what? Buy side liquidity. We just tap it. We just touch it. Play it forward. Tap it again. Multiple touches. Notice that. Multiple touches on this high. Clean. Double top. Price taps it. Taps it again. Taps it. 4 times here. Taps it. Now we're in a premium. Now, even if it touches it, in my idea, in my world, that's a break. The fact that it touches the same price point, it's been activated. That buy side liquidity pool has been taken. Play it forward. Zoom in here. Now, looking at this here, it looks like the entry idea that I'm talking about, right? It does. It does. It almost looks like it. And this is something I'm also studying too. Because sooner or later, I will adjust my model and I will adjust entry techniques and what passes and what doesn't pass. I believe in the near future, I will start to let this pass and let this be an entry idea. A fair value gap through a double bottom or triple bottom or clean lows like this, I believe this is a feasible idea. I've been seeing it over and over again, a constant pattern I've been studying. right through these double bottoms or triple bottoms. I've been seeing this very often. Price hits it, nice response away. But that's just something I'm studying. But if we want to keep it down to what I like to look for, still looking for price to break a swing low with a fair value gap. Play it forward. Price again. Look at that. Fume. You gotta know something happened here. It's gotta be institutional sponsorship that came in. Price pushes it way higher. All the way up again. We still didn't get my classic entry technique idea. We didn't get that yet. So we're still waiting for it. Keep playing. Price breaks down. Look at this. Right here. Notice, what did this large candle do? Based on what you know from what I tell you guys, what do you think this one large candle did to retail traders? Just give me one word or one term. What do you think it did to retail traders? Anybody in the chat can say something. Give you guys FOMO. Good answer. Purge. Good answer. That's a good answer. FOMO was really the closest to what I was thinking too. FOMO, fear of missing out. Correct. What are people doing here? Buy. When they see it's so fast because it's the 1 minute candle. So as soon as this candle opened, right, it might have took a couple seconds, because we don't know if it did it immediately, because it could be like, 30 seconds, 40 seconds, etc., etc. 30 seconds it went up like this, and in 50 seconds it went up like this. But my speculation, my educated guess, because I didn't watch this live, I can only imagine right here, and it happened at 8:30. What are the odds? Pretty high, honestly. It happens here at 8:30. Right here. News embargo left, CME open, boom, price takes off. But this is normally going to catch a lot of traders off guard. Anybody that is not disciplined, goodbye. They jumped off shit. They don't even know. They lost their heads, man. They're like a chicken running around with the head cut off. They have no idea what to do, but just follow along and what's going on. So it goes up. Okay, that means we're going up too. It does give some reward to the upside too, as well. But at times, this could be leading a lot of retail traders to a trap. That's just exactly what I'm talking about. When news drops, flies up. I want to see if it was news. I'm trying to remember if news was here. See something. Yes, of course there was news. Come on, Deontay. Of course there was news here. We got PPI. You got the building permits and stuff like that. Construction permits, how many homes or buildings that they're making. Things that I guess, quote unquote, the markets think are relevant to price action. Because many times fundamentals will change. This is a tip I want to tell you guys. There have been times where NFP was not exciting. For those that know, no. If you've been trading for a couple years now, you know that there's been NFPs during certain months where it was very anticlimactic. Very anticlimactic. Everybody was like, dang, that didn't do much. Same thing with CPI. There's been some CPIs that were very anticlimactic. There's a lot of news events that we think that are very hyped up. At times, the market doesn't even care about the data. Now, how would I know, right, what the market makers are using as their fundamentals on what is going to solely impact price action? I have no idea because the fundamentals change so much. We can only go off of statistical data, right, and macro data on what we normally see on a consistent basis, that these news events tend to bring a lot of volume into the market. So we're going to anticipate large moves, FOMO, luring retail traders to the wrong side, large runs, huge moves of expansion or distribution. And then sometimes it doesn't. Sometimes this news event might not give this same response next month or the next couple months when it's time again. Because the market changes fundamentals. They think that this data, it's not important. The data drops and it doesn't move anywhere. There we go. Good. Someone said in the chat, sometimes medium impacts make more. I'm just saying grammatically correct. Sometimes medium impact folders make more noise, right? Or more disruptions in the market than red folders. That's 100% true. Which is why I don't like to gear everything off of news events. Because sometimes it's so wishy-washy. One day it's this, the next day is this. I don't like that. I want consistency. Which is why I like to not play on news events. I let everybody else, if that's what you like to do and that's your style of trading, you play with it. You use the news to your advantage. It can be trickier than said. Price then trades up. But look at this. The entry technique, let's bring it back. Let's bring it home again. Right? Focus up again. Boom. Entry technique. Where is this entry technique happening? In a premium, folks. Well overbought, especially after this news event happened. Right? I can already see the retail traders going, trend line. Right? Doing something silly like this. Trend line, Deontay. There it is. It's gonna bounce off of that. Touch. I want to see another touch, and then I'm buying here. Stop loss above, stop loss below, whatever low. Nonsense. Fundamentals. Like I said before, the market decided that this folder, this data, happens to be more fundamentally sound to move price action. That's the only logical response I have to that. The fundamentals change too much. One day the CPI is more important than NFP. One day NFP is more important than CPI. That's just how it goes. And we don't know, like I said, we don't, if we could sit here, if we actually could sit face to face with the market makers and allow them to tell us, yo, that this news event is going to be very um impactful on price, very significant on price. And then at other times they can tell us, no, this news event, even though it's red and even though it's yellow or medium or large, you know, it's not going to be impactful. So don't even worry about it. Of course, we would love for somebody to tell us that, right? And give us all the answers. But it's not as easy as it is. And I'm not a I guess I'm not at that level yet, and I can still admit that. A lot of people will admit that their learning cannot progress. There's still a lot I can still learn. 10 years from now, I know I'm not going to be the same trader I am here in 2024. I'm not. I have many years underneath my belt. I've been seeing the market over and over and over and over again. Time, 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 time. People just need more time. Entry, boom, long. Sorry, short. We're short here. Let's take the news events off. We're short here. That too. Timing could be a crucial idea for the news event not being so impactful. There, right? We're short. I'm not even gonna. I'm not even gonna draw up the short setup thing. Come on, 15 pips smacked or what? And that's going into London close now. Let's just draw it up now, just to be transparent. I show these ideas over and over again, but it seems to go over a lot of people's heads. Is that correct? That is correct. 15 pips and more. Look at that. London close reversal. Ooh, London close comes in, reversal. Just continues that selling point, that high point here. Tears all the way down. Back down to what? That liquidity pool that was made at set in London and New York session. Right? That was that most recent liquidity pool that was formed in New York. Right there. Boom. It targets it. Look at the reaction around it. Hits it, runs back up. London close. Just to throw a bonus out there. This is London close open. 10 a.m. open. 10 a.m. open. Look at how it trades right above it for a quick second. Premium sell. Sells off. Gotcha. Gotcha. Right? They always get the best sells, man. The market makers always get the best sells. Right above 10 a.m. See you later. It is what it is. I didn't make the market. But these ideas can be seen on every kill zone. These ideas can be seen on every time frame, every day, every weekly open, every monthly open, every yearly open. Think about that. The yearly candle does the same thing. Open, high, low, and close. There's going to be a month that makes the low of the year. There's going to be a month that makes the high of the year. It's pretty obvious. And that is UCAD. Haven't did UCAD in a while. So now we're going to move on to, let's look at something inversely correlated. I was going to do the DXY, but spend a lot of time on UCAD. So we're just gonna jump right into this, and we're not gonna take too long. Follow along. Be attentive. Don't zone out. Pay attention. Pay attention. Pay attention. Pay attention. Look at the week. All of a sudden, it looks like magic. When you start to put this weekly opening price, let's take it off. It almost looks like nothing. You're like, it just sold here and decided to buy here. When you put that line on there, it starts to make a lot more sense, right? You can conceptualize and start taking a more neutral, bearish, or bullish stance on the market based on where price is, based on the weekly opening price. Just on that by itself alone. A- Alone, it's by itself alone, it's very powerful. Should we select pairs for it? Test out which pairs you bet. Answer this already. You have to do your due diligence. I say the majors in general. Now you would have to go through all the majors to see which one for the New York and London model would be more feasible for the idea. Because just because you have a model does not mean it's going to be sound for that pair. It may not be as consistent for AU, let's say, but it's very consistent for GU. Or it may not be as consistent for AU, but it's very consistent for gold. So you got to go through this stuff and do your due diligence. The same way I did my due diligence with the Asian session model with UJ. It's the same way you got to do your due diligence for the model itself. I don't have the answer for it because I don't track all these pairs. And I truly don't trade New York and London model. I am purely just showing it from a example perspective. Unless I actually woke up and I wasn't busy that day and I didn't have things to attend to at the farm, then I would trade New York and then I would trade London. London, yeah, you're lucky if I'm up to trade London. But if I am up trading London, it's not for me, to be honest. It's really for educational purposes. So I can show you guys that I can stand behind what I'm showing. I can take the trades that I'm showing. So moving on, AU, premium discount. Just look at where they're buying. Come on, guys. It's like a cheat code almost. Look at where they're selling. It's almost like a cheat code. You are ahead of retail traders once you know where the open is. The retail traders are putting on all these things, right? The moving averages and the lines and stuff like that. What? And I have a real good trading pal that uses it. I don't say much to him when he sees it, but he knows my body. He knows where I stand about indicators. I don't believe in that stuff because the price action gives it to you already. The mass population has been educated on trading and a way to be milked as a cash cow. People back then had to buy all these type of indicators and this and da 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 until time progresses and all these things become relatively free, and you get platforms and businesses and corporations to provide these things, and you have access to these things at a more feasible cost. Back then I would assume people were charging an arm and a leg for certain indicators, and everybody thought that once they got that indicator from this guy that coded it, this is it, this is the turning point for my trading career. No, it's not. You really think that one indicator is going to make or break the way you trade? Are you kidding me? Gotta be kidding me. New York model. Let's go into that. All right, this is AU. So this model fails, right? But I'm going to show it anyways. It's realistic because everybody says, oh, you don't show the failing setups. If I don't show the model, best believe the model wasn't there or it failed. The only reason I show it is because it was successful. I'm not sitting here trying to show you guys failed examples, but this is for the folks that want to see the setup not work. 5, 7, 10. No, I'm gonna just go through this pretty quick. Here, here. There we go. That's the weekly opening price. That's Sunday's opening. But this dash line here that you see, that's weekly opening price. This is sell side. This is sell side. Why is this sell side? There might be some people that joined us late. That's sell side because it's a swing low formation. Very obvious area of liquidity pool. Buy side here. Right there. 15-minute swing high. This is 7 a.m.'s opening price. Here. Good. Let's play it forward. Price comes up. We're in a premium. And we just rated buy side liquidity. We went above the weekly opening price and we're above 7 a.m.'s opening price. We're in a premium. Let's go down to the 1 minute. After when it runs that 15-minute swing high, I instantly just go to the 1 minute. And I wait there. Right? I'm like a lion or a cheetah or a jaguar in the bushes, right? Just waiting for the gazelle to come by, waiting for it to move, waiting for it to come close enough for me to run and chase it. That's what I'm doing here on the 1 minute. I'm stalking the setup. Let's see. We're above 7 a.m. and the weekly opening price. Zoom out so you can see that. See the whole session. Right? Clean lows. Buy side here, relatively equal highs. Pressure runs out of that. Notice how when the session starts, I bet you a lot of people that are tape reading and end up taking a live, trade or even a demo trade, when they start seeing this, they're like, I'm going short. A lot of people do that. The first beginning minutes, the first 10 minutes, the first 5 minutes, FOMO is setting in real quick because they have no idea what they're looking for. And just because they see the market breathing up or down, they just chase it. But look how it goes all the way down. It looks bearish. It looks bearish. And then boom, quick. And then you hear a lot of people on the forum saying, what am I doing wrong? What am I doing this? You're just not informed. You haven't really studied the market long enough. You don't know this stuff. You don't know opening price, premium versus discount. You don't know that stuff. It's unfortunate, but people aren't truly committed to knowing these things. We're waiting for a swing low that's broken with a swing high. Now, let me see here. Do we get any? Nope, not there. Definitely not there. There you go. You got what? BPR, balanced price range. They trap. They trap the sellers. Sorry, they trap the buyers. Fair value gap up, fair value gap down. This is trapping. I don't use BPRs, but like I said, I'm conscious of all these ideas. I don't use them though. I don't need to speak on them. Price trades back up again. See, do we get anything? No. Notice when it buys again. Look how methodical that is. Down, up, back down into a discount, back up again. Come on. Random. Can't be random. Still waiting. Still waiting. Let's see, do we get any? I believe this example shows. Yeah. So it was a failed setup in general. We didn't get no entry technique. But we can see how even within the stance or this version that we saw here, it's almost very similar. It's just that certain things I just wouldn't take. And that could be a downfall for me. And I'm okay with that. I'm okay with missing this. Yes, we do get a nice fair value gap to the downside here. Boom. Price trades into it. Right? Here. 8-hour 20 entry. I'm not sure what you mean by that. Fair value gap here. Price trades into that. Boom. Price trades into this one. Boom. And all these entry ideas are happening where? In a premium. All in a premium idea. And price trades all the way back down to sell side. So though the model that I was looking for with a swing low being broken with a fair value gap didn't form, you can see there are possibly other entry techniques that could unfold. Just because I don't take it and I don't point them out doesn't mean you don't have to, because they can be feasible. I'm showing you here. This is definitely a feasible entry. This is a feasible entry. And then on and then some. You can even see here. Look at how it just keeps pyramiding itself all the way down. Another fair value gap. Here. Price trades into it. Sells off again. Another fair value gap. Here. Price trades into it again. Sells off. This is just clean price action. Not to say it would happen this clean every single time when you're looking to stack your shorts. Because sometimes you'll look to go short here. You look to go short here on this last fair value gap, and then it pulls all the way back up. Got to be careful. Got to be careful. That's FOMO, though. I feel like most people that do that, They see this leg down and they're trying to get into the trend and they see that, they're like, I could get in. Let me risk 3% here. And then it pulls back on them. And they're like, oh my gosh. Well, you should have been in a trade way before, or you should have been on time, or whatever the case may be. Let things go. Just because you see the market going doesn't mean you have to get into the trade. Take your time. But all in all, what can we see here? Purge buy side, revert back down to sell side. Whoop-de-doo. Wow. All it is chasing liquidity zones. But I framed it though. I framed the liquidity pools based on the dead zone. I'm not saying it's always going to react this way around the liquidity pools, but I know I can see a feasible, methodical pattern over and over again between this zone here. Over and over again. It's sold above 7 a.m. and above weekly opening price. Wow. Come on, guys. Come on. Other people are not teaching it this way. I don't know why they're not. Maybe they just don't know. And that was Monday. So technically there was a setup here, but it wasn't the one I was looking for. I wanted the swing low broken with a fair value gap. We didn't get that. Even if I were to check the 2-minute. Right? I did a little homework before coming on here. The 2-minute, no fair value gap that breaks the swing low. So not at all. Go back on the 1 hour. We got Tuesday London model. Right? Play it forward. Do. Boom. Stop here. 15-minute. People may say, you sound like a broken record. You don't show us nothing different. Because it ain't broken. It ain't broken. And I challenge you guys. If you can find a way to optimize the model, optimize it. Don't just sit here and think, this is the end all be all. If you can study this and do a little further research, optimize the model. Do that. Because that's how I learned the Asian session model. I learned it from ICT. The 20 pips per day video is literally where I was inspired to learn the Asian session model. And then after that, that's when I said, wait, can this model also be seen in London and New York? And then I was like, oh, wow. This is basically very similar to what? The silver bullet idea. It's literally the same thing. It's a turtle soup idea. Now, I may not follow all the rules to a silver bullet idea based on the model that I created, but it's very similar in nature. It's very time specific too. The silver bullet. 2 a.m. to 5 a.m. Let's go back. Find the liquidity pools. See what liquidity pools we have available to us. So this is the lowest low at midnight. Right, midnight opening price. And then it's the highest high we have at 2 a.m. or 2:15. And then we also have sell side and sell side. Cool. Then we also have the opening price for the London session. So this 2 a.m.'s opening price. And just looking at it now, right? I just want to see where price is going to go. Okay, so it comes up, it takes out that. Then it runs back down. Could there be a selling opportunity here? Potentially. Let's go in 1 minute. Let's see what's going on. Do we get a fair value gap at any point after breaking that 214 candle here? Actually, it should technically be up here. 215, because that's the highest point here. Breaks that 215 candle. Boom. Buy side's taken. Now we're looking for what? A fair value gap that runs a swing low. And we got one right here. Small. There you go. So we got that here to here. So we're looking for price to go short. I'm looking for a short entry here. Though we do have conflicting ideas here, because price is now below the weekly opening price, which is really ideal for buying conditions. And then we have price above 70 as opening price. So there's conflicting views here. At times, I said this before, you will be forced to sell in a discount below the weekly open and vice versa. Let's play it forward. See if we trade back into it, and we do not. So we don't get any entry here. At this point, we take out sell side. After taking out buy side and then also taking out sell side, I don't look to take this entry again. I don't look for price to come back into this and go short after taking out the sell side. I'm not looking for that. That whole entry idea is scratched. That pending order that doesn't get filled is completely canceled off my MT4, MT5. I'm not using it anymore. But now we taking out sell side. I'm going to look for see if price is going to revert back down, back up to buy side. Because after taking out this buy side liquidity pool, it created a new liquidity pool. The market is constantly creating and destroying liquidity pools. It created this liquidity pool before dropping. I just know. 15 minutes swing high, most likely, that formed in 2 a.m. opening price inside London kill zone. Let's see if we get a long opportunity because now they're agreeing. We're below the weekly open and we're below the 2 a.m.'s opening price. So I want to see if price is going to go higher. Do we get any fair value gap that sweeps the swing high? Zoom in here. Below 2 a.m.'s opening price. That's 2 a.m. Let's see. Going up, going up. Notice that same thing again. The double bottom, double top getting ran by a fair value gap. That's something I've been studying too. And I think sooner or later, I'm going to start considering this an entry technique. This style of entry, double top or double bottom rated but speed. Price comes down. This off. We still haven't got back up to that new buy side liquidity pool. Let's say we're still watching it. We're still playing it out. Now we finally get out. We take out all these too. Take out all these as well. Still didn't get that entry technique we're looking for. Swing high broken, fair value gap. There it is. There it is. You see it? Going too quick. Finally, it forms. And just in case I'm making a mistake, because I'm only human, yeah, that's it right there. So it happens very late into this session. From here to here. Ooh. See? As soon as I think it is, it's not. This high is the same high as this swing high. 65, 128. Yep. So this would not even count as one. So this wouldn't be an entry technique. But let's just see what happens. We'll play it out. Taps into it. 5 a.m. comes around. And we're in the London lunch going into 7 a.m. Wow. Insane. So I said this before. Sometimes the entry technique that I am picky about can also be my demise. You know, it could be holding me back. I still find success regardless because I limit myself. It doesn't make me trade as often. The fact that I'm waiting for a specific entry technique instead of taking all 15 or 20 different type of entry ideas, I already am reducing my risk by having less exposure entering the market because I could be twitching at every second, you know, like a squirrel, like, you know, a dog chasing a squirrel, like, oh my gosh, there's a squirrel over here. And then there's a squirrel over there. There's 20 squirrels. Which one do I chase? Maybe I chase the one with, you know, the furriest tail or the one with the brownest coat, whatever the case may be. It's the same thing with the entry techniques. You got to be specific because you're going to be running around and confusing yourself. This can, like I said, I'm still trying to see if I want to classify these as entry techniques. I'm still developing as a trader. Before, if you watch like episode 1 to like maybe episode 10 of the Asian Session Library, this was my entry technique generally. Just any fair value gap that sweeps, any fair value gap that forms after breaking a swing point, which could be any of these earlier ones too. And sometimes it led me to a lot more drawdown or a fail setup. But all in all, you can see with this idea, you're purging buy side, you're returning back to sell side. You're taking out sell side, you're returning back up to buy side. Nothing changes, guys. And many people know what this is. Just looking at it, you can tell. It's so funny when you see it. Retail is going to say, oh, reverse head and shoulders. That's what they will say. But this turns into a kilo. Swing low on the left, swing low on the right. This low most likely will not be rated. It will be protected. Price is going to try and get away from it. Something you would learn if you have the time to read Larry Williams' book. And then we got one more example, and then we'll move on to the next one. So this example is a failed setup. We're going to show it anyways. It is a this AU. No, I said a New York model. It's supposed to be a London model. Um, it's a London model idea. And right here, go down to the 1 minute, 15, here to here, 5 a.m. It's a very simple idea. It doesn't take much brain power to set this up either. To mark up your chart and look for it, it doesn't take too long. It takes less than when you really get good with it, it takes like less than 2 minutes to set this up. Done. Take this off. So price sometimes you gotta watch. You want to see what happens around 2 a.m. So this is the high. That's the low. That's the low. We got buy side, we got sell side. Got to open here, here. Here's 2 a.m. And now we play it for it. See what happens. Price takes out that buy side liquidity. Boom, runs it out. We're now where? In a premium above the weekly open and 2 a.m.'s opening price. That's good. Now we're looking for an entry technique idea. What are we looking for? Swing low that breaks a fair value gap. Sorry, backwards. Fair value gap that breaks a swing low. We got it here. Happens really early. I like when it happens earlier in the session because I don't have to trade. I don't have to sit here and watch it anymore. Because if it hits stop loss, it hits stop loss. Done. I could set it, forget it. I don't like when it happens very late in the session. So the last Asian Session Library episode 36, we're on episode 36 recently. That entry technique happened at 11 something p.m. Literally the last hour of the Asian session. And if I would have given up on watching the Asian session, I would not have found a successful trade yesterday. So it's just sacrifices you take trading the model. Some people ask me, oh, is there a certain time I should come and pay attention to it? You got to watch the whole session from start to end. From the time the session opens to the time it closes, you want to be there. Because anywhere in between that, the entry technique is going to form. It happens either in the beginning phases of it, the mid phase, or the last phase of the session. And yesterday was the first time I've experienced it happened so late. That was the latest I personally have ever seen it happen. And that's the beauty of, trading. You're going to get new scenarios. And eventually you have a data pool of different scenarios so that when people ask you, oh, what do you think about this? Oh, I've seen that 1,000 times already. I know what that looks like. Price trades into the fair value gap. You're looking to go short there. We'll see. This is what it would look like. You would go short here, here, done. 2 a.m. weekly open. Cool. Play it forward. And we got down to what? That sell side. Purge, revert. Wow, guys. I struggled trading the London session. Until I figured out this model, it's become easier. Though my life schedule doesn't allow me to trade this because I live in New York, I would be sleeping here. Outside would be pitch dark outside. Everybody in the house would be sleeping. But before, when I was trading London session, I was staying up and I was in college and I was, sacrificing my sleep and very sleep deprived and this, next, and the third, impacting my health by staying up so late. I struggled to trade London session. I wish that I knew this model when I was in college, when I was still, um, a little younger, not to say I'm not young. When I was a little younger, when I was 18, 19, 20 years old, 20, 21, 22. When I was young and I was trading London and staying up, I wish I had this. I wish I did. I truly do wish I had this because it would have saved me a lot more money, a lot more time, and I wouldn't be so stressed out and gone through a lot of emotional disturbances trading because I know this can impact your mental health as well. As much as we want to sit here and say, "Hey, we're dudes, we're males, macho, macho," bro, this stuff I know this will break down the toughest man I know, bro. Especially when it comes to your money, man. I'm gonna play it all the way through, speed it up, we're going to 5 minute, see if it gets stopped out. It was successful. I don't know why I wrote down it failed. It was successful. There we go. Look at that. It even gets back to the original point of entry, and then it sells off. And notice how it brings itself right back above the weekly open one more time, and then it sells off. Incredible, man. Incredible market action, price action there. Sells off. And that's on a Friday, going into New York session. So if you haven't found a trade in London, it's okay because you may be able to find something in New York as well. And I can see there's a small Judas swing here. This is 7 a.m. here, 7 a.m. And you can see it pulls up slowly up, and then it drops one more time. It also rated the London high. Look at that. So what did it do? It went from buy side, sell side, back to buy side, and then back down to sell side liquidity pools that it created. What do you have here? Trend line users. Oh, there. Trend line, right? I want to use this trend line. I'm gonna draw it at this angle, 45 degrees angle. And this next and third, I'm gonna draw it like this. So it supports my idea. They draw it in a way that it supports the idea, not logical. Last week, each such model failed each time. What was the cause? They'll follow the model. Happens. Higher time frame was definitely pushing for like I said, I'm not going to sit here and try and justify the reason why it failed because there could be many scenarios and many reasons behind it. We're sitting here trying to validate why did it fail or why was it successful. As a trader, you want to try and take your mind, you want to try and take your mindset off of that. Why did it fail? It could be 50 other scenarios why it failed, my friend. And I can tell you one, and you may say, "Oh, it's just because of that." What if I'm wrong? What if it was because of another reason? If I had to give you a reason though, right? I would say because the higher time frame was pushing for higher price action. And most times, all the setups this week was generally a sell setup. I believe most setups were sell setups this week. And the only this week, Thursday, Thursday was the only successful Asian session model this week. So hopefully that makes sense. So that's our weekly range review. New York model, London model, very simple ideas. I'm not going to get into Asian session because you guys know it. I have a whole series on it already. I'm not going to be making a series about London and New York as well because just too much work. If you want to do that yourself and you want to make a YouTube channel and you want to make a New York or London session series too, by all means, go ahead and do it. And I don't even care if you don't give me credit. I don't care. Do it. Do it. The next topic we're going to jump into is going to be small range versus large range, and we're going to be looking at UJ for this example. Sip of water. I'm going to get right into this. This is an ideology I learned from the book. Where's the book at? I know I had it right next to me somewhere. It's long term. Yeah, there it is. It's Long Term Secrets to Short Term Trading, the second edition by Larry Williams. If you don't have the book, trust and believe, I can get you the book. If you're not in the Telegram channel, you won't get the book. If you join the Telegram channel, you'll get the book. No, nothing attached to it at all. I'm not going to charge you. I'm not going to do something funny. You get the whole book. But this idea that I learned was from Larry Williams, and I'm going to bring it back. Some of you guys know this. We're going to bring it back to this example here. because it was just a very good picture of what Larry Williams was saying. And it happens on every asset class, not just because I'm showing it on gold, right? Don't think it's just gold that does it. It happens on all markets. Everything that I'm showing you in general that I'm talking about, or any model that anybody is showing you on YouTube or Twitter or wherever you're getting your information from, those same ideas can be applied to any asset market class because they're all coded. They're all rigged. They're all rigged, guys. It's a rigged game. It's rigged against you. However, we have people that are very, intellectually sound and have sacrificed years of studying to understand the price action. So I'm really happy with, where I stand in history with all the information that we have provided in trading. Because think about it. What if there was no ICT, right? What if there was no Larry Williams? What if there was no Wyckoff? What if there wasn't certain people in the industry to push the boundaries of understanding what price is or what price action is? A lot of people will still be trading off of retail logic and indicators and trading patterns. Not to say those don't work, they can work too. But we know at times it can be really clunky, it can be really unrealistic, and it can be seen too often, way too often. The small to large range ideology or methodology is the natural movement, right? The birth and the cease of the market, the way it actually goes through and travels through time. There are moments in time when the market is very small and not volatile and less exciting. And then there are very obvious days when we look in the market, it's very volatile and very exciting. We're almost as if something is going on here. And there is. There is something going on here. It's a cycle. The market is picking and choosing when to turn on that cycle. And there's a pattern. The pattern is in the book by Larry Williams. He said that if you get a small candle, be prepared for a large candle to come into play. Doesn't mean it's going to happen immediately the next day, but in the near future, a large dynamic candle will produce. And when a large candle is produced, be prepared for the market to produce a small range candle. And you can see that exact thing right here in this small period of price action from November 3rd, 2022 to November 15th, 2022. Not that I'm just highlighting this point saying, oh, this is the end all be all. It happens everywhere. But this one was just a very over exaggerated example. And it was very good to use as a teaching moment. The small candles psychologically make people uninterested in trading that asset pair. They believe it's not cool, right? It's not exciting. What's the vibe with gold, right? That's what the young people be saying, right? What's the vibe? Is the party lit? Nah, there's not a lot of people here, bro. Don't come here. But then 30 minutes later, right? An hour later, man, the place is packed to the wall to wall, all the way to the DJ booth. It's packed. And then later that night, people are like, what's the name? Someone said, what's the name of the book in the chat? Long-Term Secrets to Short-Term Trading, Larry Williams. It's in the Telegram channel. Um, but that small range candle makes everybody uninterested. So what do? They go to something else that's really popping, you know? Oh, this club is really jumping, man. Yo, come to this club. Come to my pair. Come to my asset class. Come to crypto, you know? Come to metals. Come to oil. Come to commodities. Come over to futures. Don't look at that. That stuff is boring, bro. It's not moving. And as soon as they flip the page, right? As soon as they go to the next club that supposedly was jumping, right? They check their social medias, they check their Snapchat, their Instagram stories, whatever. Yo, this club is lit, bro. You need to be in this club. As soon as they pull up to the club, everybody's already left. Yo, no doubt, fam. I'm glad you're here. Appreciate your time, my G. It's the same thing when it comes down to the market. The same thing. Let's talk about it again one more time. The small candles make people uninterested. But that's your moment in time to be most focused. The small candle is where you need to be focused because in a matter of moments, right? And we're talking about it from a daily perspective. In a matter of days or one day or a couple hours, basically, it's going to be on and popping again. Like I said, you have everybody in their power, right? Trying to convince you, yo, bro, come to this club, bro. Yo, come to this event, bro. Yo, come to my stand. It's lit. We got everything from girls, from money, from cars, your jewelry to this, etc. Enticing you to come. Soon as you pull up to the function, it's not as it seems. Or for some reason, everybody had left and went to another scene. So you're stuck there like this. You're just like, it's FOMO, fear of missing out. You thought that it was going to be cool and popping, but it wasn't when you got there. It was a couple hours ago, but when you got there, it just died off. Something happened, something dangerous, for some reason they had to close down the event or whatever, something happened. And then you're just stuck there in a small range cycle once again because you're chasing hype. But you need to be there when the hype isn't there. You need to be there when there's nobody there. Because sooner or later, there's going to be two people that walk through the door, five people, 500 people, 1,000 people. Now the place is packed. And now everybody's talking about this club again. Everybody's talking about this party again. It's the same thing with the candles. Think about it. Gold will go into a small range cycle and nobody will talk about gold, bro. Nobody. Nobody will talk. And gold in itself already has its own hype in the community. Nobody will talk about gold in their Telegram channels, their Discords, on all the news platforms, like FX News or any of the popular Forex news stations, right? Or even Twitter, people on Twitter that provide information to us, as resources. Shout out to Yusuf, by the way, too. Yo, shout out to Yusuf. Big up to him. Like, I don't even, Yusuf has been doing great for the community, bro. Like, just sharing real knowledge and real game. Like, I really appreciate that, dude. Shout out to Yusuf for real, though. Like, really got to shout him out. Appreciate you, dog. Um, but you'll see that when everything gets so small and quiet, nobody wants to talk about this stuff. But as soon as gold starts shooting 200 pips in one direction, 500 pips in one direction, oh my gosh, bro, did you see gold? Of course I saw gold, bro. I probably was in the trade before you even knew it. Of course I seen it, bro. I was in the trade. I caught that. Did you see it before it happened? Probably not. You saw it after it happened. That's why you're texting me now. That's why all the news stations and all the headlines are talking about gold. Because nobody expected it to happen. But after it happened, after the event happens, that's when everybody wants to chit chat, right? And run their gums. Blah, 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 blah. Yo, did you see gold? Yo, it hit $2,000 a share. I mean, $2,000 this. And yo, it might push to 3,000. It might push to 4,000. That's when everybody starts to chat. But before it got to 2K, who was there? I was there. I was tracking gold, right? Other people wasn't tracking it. But when it got to 2,000, everybody's like, "Oh my gosh, I need to be paying attention." And what happens once they come around again? Everything just fades and dissipates. The truth is so close, but the FOMO really gets a lot of people. So you see, small, large. Everybody was excited. This is when they start going into the Telegram channels and the trading view chats and stuff like that, and they start talking about, "Yo, bro, did you see gold?" Everybody's like, "Yeah, man, I think I'm gonna go long." All right, let's go long. Everybody's so optimistic. Yo, we about to go long gold, bro. We about to make a bunch of money. We about to risk 4% on this trade, bro. We going full margin. What happens the next day? These dudes are broke the next day, bro. And obviously, I'm talking about worst case scenario, right? I mean, I'm over exaggerating. Now they're broke the next day, all because they saw this FOMO. Boom. But all they had to do, right, was give it one more day. All they had to do was give it one more day. You know what, bro? I'm long. I want to be long on gold, but I want to see a small down candle, or even not even a down. Let's say not even a down candle. I just want to see a small candle first before I get in. Okay, bro. I'm with you. I'm on the same page as you, bro. Let's wait for a small day. Small day on Monday. The next day, boom. Bro, we made 10 bands, right? And I'm not saying that you can make 10 bands in one day. It's possible, but I'm not saying you can, right? Disclaimer. Yo, I made $10,000. I made $100. You're right. I made $100. Great. And then you tell your friends, yo, I made $100 trading gold. And everybody's like, dang, I should be paying attention to gold too. What happens to those people? Ah, damn. They're like, bro, you set me up. I lost money. You told me to go long on gold. And then the next day it goes up. And they're like, oh man, you were right, actually. I just got the timing wrong. There you go. Price and time. Not every day is a trading day. You don't have to trade every day, guys. Who's telling you guys that you need to be in this market every single day, Monday through Friday? Let's say Sunday to Friday, right? Sunday to Friday. Who's telling you guys that you have to trade every day? Can't be me. I know it's not Deontay. I know it's not ICT. I know it's not any of the profoundly, well suited people in the community. I know those people are not telling you trade every day. I know they're not. It's you, right? It might be your circumstance that makes you feel like you're under pressure, that you have to trade every day. You don't. Take your time. Take a deep breath. It's Monday. We just started the week, dog. Chill out. Let's wait till we get into Tuesday, Wednesday, Thursday. Then we can start getting a little more excited. Then we can actually be like, oh man, we got to be paying attention. Monday, I choose not to trade Mondays. Look at this too. Look at Monday, small, small. But then look what happens when we go into an ideal trading day like Tuesday. Boom, dynamic. Woo, right? I'm telling you guys how the market is going to most likely operate on a day-to-day basis during the week. Tuesday, Wednesday, Thursday. Tuesday, very large. Look for setups. Look for setups. Wednesday, okay, small retracement. We wouldn't have expected that. Cool. Let's say we take the loser that day. Thursday, do we still have an opportunity? Yes. Thursday, fume, large day. And if we're able to get a swing trade, you hold it. You hold on to that. You can also see here, just a little plus. And nah, we'll leave it to the end. We'll come back to this. But those that see this, there's a trend happening here. Swing high broken, higher swing low. Boom. Let's look at UJ. USD, JPY. I think I had this prepped already for you guys. There we go. All right. So I have a couple examples here from 2024. Just I don't want to go back in time. I don't want to go too far. I just want to use something relevant because people may say, "Oh, D, you're just picking specific moments in time." Well, let's talk about what's happening thus far in this year. So right here, we got the last official trading day of 2023, and it was a small range candle, and it was down too. But let's just refer to it. It was a small range candle. The next day, look at what happens. The candle the next day is larger than it. And we're talking about not just the wick. Let's really focus on the body of the candle. The body of this candle is larger than that. And then you can see it continues into this large range cycle. Small goes into a large range cycle. And then all of a sudden, we go into what? A small range cycle again. Small. For a couple days. 1, 2, 3. The arrow that I have is just pointing out the small range candle that comes before the large range. So all these are also small range candles. You can see this is literally the market opened and closed right on its open. Right? Opened, traded up, maybe traded down, traded back up, came back down, and closed exactly where it was birthed at. Exactly where it was born is exactly where it died. That's where that candle was birthed and deceased. Small, small, small. There is only one other option that's going to happen here. Large. Can't stay in small forever. Large picks up. Boom. Wednesday. Look at that. A Wednesday. Large. We know Wednesdays is going to be the most dynamic trading days out of the week. Large candle. Another day. Large goes back into small. Why are we considering this small? because the previous candle in itself is larger. Just look at the body of the candle. Very obvious observation. I don't have to sit here and measure the pips, right? Just, it's large, small. This candle is smaller than that, so we're going back into a small range cycle. The next candle is even smaller than this one. I can see the body smaller. Boom. Eventually, we're going to kick into a large range cycle. Large range is kicking up. Boom. Large range, large range, large range. That's where all the excitement is happening. Look at that. All the excitement is happening after the small candle. And after all that excitement, right, that trading environment, man, all of it dissipates. Small candles come into play again. Then we finally get a small candle, then a large body candle forms. Let's delete that. A large candle forms again. Then it goes back into small again. And a rule of thumb is when you get a large, look back the last 3 to 5 days. Look back the last 3 to 5 days and compare from that current day. Is there any candle that's larger than the candle that you're currently trading on? If so, that means you're waiting for the price action to outcompete that large candle again and produce a larger candle that you have within the last 3 to 5 days. Small. So large, small again. This is still small. Why would I consider this small? Because looking at this day, looking back the last 3 to 5 days, even 3 to 7, honestly, right? The last week. Let's say we look back to last week. Just keep it very simple. Look back the last 7 days. Is this candle larger than this candle? No, we're still in a small range cycle. Still a small range cycle. Still a small range cycle. Definitely in a small range cycle, right? Then now we start picking up again. Large range comes into play. These look relatively equal still. Close. Let's say we consider this a large range. Large. This candle looks smaller than this one. Small range. What happens? Boom. Dynamic. Here. This happens on a Friday. Small. Large again. Small. Small. Large. Small. It's still small compared to this. Large is coming soon again. Think about it. UJ's been trending higher. A large range cycle is going to come again. A large dynamic candle. I don't have to be a genius to see this. I know, taking an educated guess, not saying I'm going to be right, but I know a large candle is going to come. Like, come on. It doesn't take much brain power to see what I'm showing you. And I love this. And I'm so happy that I came across this information, which is why I keep sharing this information. I'm glad that I took the time to buy Larry Williams' book and to read the ideas that he had because it's so far out. It's so different from what commercialized traders are doing with the moving indicators and the crosses and the Ikomoku clouds and the volume indicators and this and that. It's so far away from that stuff. It's so different and it's so natural. It's just pure observation, naked eye. It gets me way closer to the truth. And that's the large range cycle. So how do you use this to your advantage? If you know that the higher time frame is trending up bullish and you get a small daily candle on a Monday, a Tuesday, if anything, too, or even a Wednesday, look to buy the following day. Meaning, if Monday is small, Tuesday might be the large day. If Tuesday is small, Wednesday might be the large day. If Wednesday is small, Thursday might be the large day. And bonus, of course, if Thursday is small, Friday might be the large day. Very simple. When you add in other layers, of course, confluences of trend and direction, you're able to take better educated guess when these things are going to happen, especially with the swing points. You start to see why I'm so dialed in to why I'm only looking at the swing points. Deontay, why do you only look at the swing points? Because it is what makes the market. The market is doing two things. It's creating swing points and it's destroying swing points, guys. It's always been in front of your face the whole time. But nobody wants to make it a known thing in the community. I will. I'll keep standing on it. I don't care. The swing points is what you need to focus on. It's telling you a story, guys. All these swing points have told you a story. And you may not know the story to the T, but you can come up with some type of analogy. Oh, price ran this swing low and then went back higher. Oh, so this had to be a false break. That's it. You don't have to overcomplicate it. Oh, the sellers were in at 146.60 mid-figure level, and the news dropped and CPI came out and NFP came and then it dropped and then it ran higher. Too much. Keep it simple. False break. Call it a done deal. Now, when we take this same concept of small to large range, we can see how we're able to take a lot more out of the market and be on the right side and to get to profit much sooner than later, because it's a good feeling. I personally think it's a good feeling when you execute a trade and it gets into profit more times than it is in drawdown. It's a great feeling. And I always want to have a more positive, whether it's a neutral to positive feeling. I want to be neutral to positive every time. I like that feeling. I don't really want to be neutral to negative, because it starts to trigger things in your head psychologically. It starts to play with you. I don't want to be neutral to negative. I want to be at least neutral emotions to positive emotions. And if I can catch those large days, I know more than not I'm going to have a well-off positive experience. And that can carry on and put me in a trading zone. I get into a zone. If you haven't read that book by, I think it's Mark, what is it? Marcus Douglas or something like that. Something about dang, how do I forget the title of it? It's about trading psychology. You want to get in that zone, get into that edge. And these are the things that get me into that edge. The cycles, large to small, large to small. So hopefully you guys understand that. Once again, I showed it here with UJ. I showed it here in that example for gold. It's the same thing. Nothing changes. The large candles, lower retail traders, they are sheep. I am not a sheep. I am a wolf, meaning I am informed. I know how to go hunting. When I see small candles, I am hunting. Point blank, period. Hopefully that makes sense. So we're going to move on to the next topic. I have it written down here. Now we're going to spend some time on this one, because I really need you guys to, I want to get this into your head. Like, I wish I could just permanently stamp it in your brain, right in your frontal lobe. Like, you know how to do this. So I'm going to talk about trend identification. I have plenty of videos on my channel that talk about trend. I even dedicated a small series, a 3-part episode series on talking about daily bias. All right. So when you come here, you go forensic. Go to my channel. Go to playlist, or even you don't even have to go to playlist. I set it up on the channel so you guys can see. You can see the things I want you guys to be more in tune with. Now, for you, obviously, this is just a random. The algorithm is going to pick a video that it thinks you should be watching off of my channel, right? So this is what it's suggesting for me. And most likely it's the most recent videos. But here, daily bias recognition is the very first playlist series I have on the channel. After that, it's the 2022 lessons that I have, right? Then it's the Asian session library, right? I want to teach you a short-term model, something very short and simple that you can apply tomorrow, if you wanted to, and see if it's going to work or not. Very short-term model. Series, I have to update you guys on the other prop firm. I haven't had a chance to go around and start phase 2. So I'm going to jump into doing phase 2. Forensic Forex 2023 here, right? All the ideas that I like to use. My least favorite one is outside bar. I'll be honest with you guys. This one right here, least favorite idea. If the data range, the tracking from 2023. So when I first started going very public on YouTube and tracking this stuff, you go back and watch this stuff. There are gems in here, man. You're like, damn, Deontay, how were you able to hold gold to this level the entire month? How did you call AJ to this? You just gotta follow day to day, and then you got some popular videos, and that's it. So the playlists are there. They're all there. Just take your time, go through the channel. I don't have a lot of content. I don't want a lot of content, right? I'm not doing this for monetization. I'm not doing this for money. I just want the content out there so that people can be very concise and be able to come to my channel and be like, yo, this is it. I can apply it tomorrow. Or this is it. I can study this for the next 2 months and see if it's actually feasible. I like to think of myself as a very what's it called? A trader that's gone through ICT's mentorship, and everything that I've learned from ICT and everything that I've learned from Larry Williams, it's comprised and simplified on my channel. I don't use every single logic and every single model from ICT. It's my personal touch to it. That's why you don't see certain methodologies on my channel. I told you guys in 2024 I will not be making no more model videos because what I think I have on my channel is enough for any level of trading. I'm not going to make any more model videos. You got the high odd, you got the high odd. These are some good these are great videos, you know? And of course, I'm going to stand on my channel. High odd reversals. This talks about London close setups. I don't trade London close, but I'm showing you how to if this is the time period you're available 10 p.m. to 12 p.m. If that's the only time you have available, look at this video. It will help you figure out how to find trade setups during London close and how to utilize it a lot better. If the look back data ranges, how I use it. High probability buy scenarios. I'm showing you buy setups. I'm literally showing you buy setups. People want to know how to find buy setups. It's right here. It's right there. Weekly opening price. We talk about this every week, right? The weekly range review. This is it right here. Sunny's opening price. The daily draw. How is Deontay able to figure out where the market is going on a day-to-day basis? It's right here in this video. It's a 20-minute video, but it's showing you. You can tell a horse to go drink water, right? You can lead a horse to go lead the horse to water, but they ain't gonna drink it, right? You can put the videos out, but people ain't gonna watch it. They're gonna ask me, and I don't mind. But I'm gonna just say, hey, yo, it's on the channel. You check the channel. You check the playlist. Did you look at it? Did you watch it? Because sometimes it does take a lot out of my time, respectfully, from a man to another man. It does take a lot out of my time to have to sit down and answer the same question 50 times, 100 times when it's in the videos. So just take your time. I don't mind answering it. I'm a kind soul. I'll do it for you guys regardless. Even though people ask me, I still answer it. Sometimes I literally drop everything that I'm doing. It could be like 5 a.m. in the morning, right? 5 a.m. I'm sleeping and I hear my phone do that telegram thing. Do, 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 do. I get that little beep, right? I would get up out of my sleep, check my phone, and see it's somebody from the channel, and I would answer them if I'm not too tired. I would sacrifice my own time just for this person, one person. Try to connect with everybody on a one-to-one basis. Some people don't reach out, and it's cool. But those that do contact me, I'm right there. I'm a text away. I'm right there for you guys. Sometimes I might be short and blunt with my responses. And I don't mean to be rude with anybody. Let's jump into trend identification. So we're going to talk about a few pairs. We're going to be looking at we're going to switch it up a little bit. We're going to look at yen crosses because yen crosses have been going crazy, man. Crazy. Yen crosses. If you are not watching the yen crosses, man, I don't want to tell you start watching it and then you jump into a small range cycle because it's a psychological paradigm that we're all stuck in, I've been watching yen and it's been very exciting for me. But then when I tell you go watch it, it might not be as exciting. So yen crosses, we're gonna jump into yen crosses. So CAD many are called, few are chosen. 100%. You can't take everybody. Everybody can't win, and not everybody can comprehend the information. That's a real conversation that a lot of people may not have with themselves. Trading may not be for you, to be honest. Trading may not be what you're meant to do in this life. I'll be honest with you. You know, do I think I was born solely to trade? No. I think I was born to educate and help other people. That's it, to leave my mark on other people. I don't know which way it was going to be. So far it's been through trading, fitness a little bit, and farming. That's it. That's really it right now. Did I ever think I was going to be a forex trader? No idea. I never thought I would be this. Let's talk about trend identification. So we're looking at Japanese yen versus Canadian dollar. Canadian dollar versus Japanese yen. We all know in recent talks, I've been talking about this for months, years, Bank of Japan sucks. Nobody likes yen. Yen is the worst currency in the world right now. If you got yen, you need to burn that. You right? You need to burn yen or convert it into another fiat currency. Go to your local, forex exchange marketplace in your country. If you got yen, get rid of your yen. I'd rather you get into Canadian dollar, US dollars if you can, New Zealand dollar, anything else besides yen. Stop holding yen. This is for people that might live in Asia. I think my demographics does not have a huge following in Asia or in China. Um but if you are one of those people that live in that side of the world, I feel sorry for you, honestly. Especially you live if you trading with buying stuff with yen, man, they've done the citizens a disservice, man. It's a shame. Um, but time will tell. Looking at this, we're gonna talk about how did we get here in 2024. So the last day is February 16th. How did we get here? Let's reverse engineer it and start down here because you can see something happens down here to get us here. Gotta always reverse engineer these things. All right, let's bring it back. Let's bring it back. And we're not gonna even talk about seasonality and stuff like that. Talk about pure price action. I need to get this across again. I'm going to look at a couple examples. I'm going to look at CAD, GJ, dollar, and AU. So going into the year, right? Clean slate, right? Kind of clean slate. Going into the year, let's see what we got in recent time. Any swing highs or swing lows that we have on a daily, right? We're going to be looking for that. All right. So we got one down here, right? This is what I would do, right? If I had no idea where market was going, I would start marking off swing points. Got one down here. We got one up here. Got one up here. That one's just above it. This is not broken. This is unbroken. This is unbroken too. Right there. And we got one right down here. Swing low. 1, 2, 3. It's still a swing low. It's not a confirmed one, but it's a swing low. Price breaks it. Breaks that swing low formation. Is it a swing low? Look carefully, D. It's not. It's not a swing low. Okay. So this is all we have right now in time. Oh, we had this one here. There you go. Boom. Swing low broken. So the most recent swing point from this point on was this one here. It was broken. So let's walk through it as if we were following the formula to find trend through my idea, right? So caution sign. What is happening here? If anybody in the chat can tell me, in my belief at least, right? If you've been following it long enough, what do I define a swing low broken as? What kind of momentum? Looking for it. One word. What kind of momentum? When a swing low is broken, what momentum? Up. There we go. Lenny, yes. Bearish momentum. Correct. Swing low broken, in my eyes, equals bearish momentum. Did I spell that right? I think I did. Close enough. Bearish momentum. Now, in order for me to confirm this bearish momentum and to be confident in it, I want to see. I did spell it wrong. Figured. I want to see a lower. Right. The next question is: does a lower swing high form after breaking the swing low? That's the question I'm asking myself. Does one form? Well, we have to wait and see. So we have to let a couple trading days go by. Now, within those trading days, could you be looking for setups too? Yes. You may be looking for short-term setups or scalping ideas. But me personally, I'm not normally going to be doing that unless it's just the Asian session model I'm looking for. But within that confirmation and looking for trend, Deontay most likely is not looking for any day trade, London or New York. I'm not looking for trades. I'm just waiting to get a better grasp on where the market wants to go before I start getting into swing trading or I start getting into position trading. I need to understand where it's going first. So let's play it forward. Do we get a lower swing high? No, we don't. So a couple of days go forward after breaking this swing low, play it forward. Instead, we break a swing high. So this is now considered what? A false break, right? I'm taking an educated guess. This is a false break on sell side. This is how I like to paint the story in my head. This is how I'm thinking about it. Swing high, swing high. Now, can anybody tell me when a swing high is broken, what kind of momentum is that? Bullish, exactly. So we just switch this now. We're just gonna write bullish. Now, after that, correct, exactly, bullish momentum. Good job, excellent. After getting that bullish momentum, I'm waiting to anticipate a higher swing low. So it's just flipped. It's the inverse. Exactly, correct. A higher swing low. Now, does a higher swing low form? Well, let's wait and see. We don't know. Let's see. So we play it forward. Now, in this too, now we're going to slowly break it down. In this too, we got a PD array. We got a fair value gap. I like to see that. That's interesting. I'm like, okay, we broke a fair value, we broke a swing high, and we also produced a fair value gap. Now, this fair value gap doesn't break the swing high, but in itself, the market makers gave us one. It gave us a fingerprint. So I'm like, okay, this is most likely where we're going to get the higher swing low. How do I know this? Well, just because of time of seeing it over and over and over and over and over again, all the time. For example, let's just take the left side of this chart, here to here. I'm not looking back to see what was happening here, but just look at it. There's a fair value gap to the downside. Price breaks a swing low. 1, 2, 3. Swing low. Boom. Creates price breaks a lower swing high inside. It's pretty obvious and subtle thing you see on the daily pretty consistently. Waiting for a higher swing low. Let's see what happens. Okay. 1, 2. Oh, wow. We got a down day, right? On Monday. Interesting. What could Tuesday be? We're trending up. Could I take an educated guess that Tuesday can be an up close candle and also be the candle that's confirming a higher swing low? Yes, I can. Right? I'm taking that educational guess. I'm taking that educated guess, educational. Taking that educated guess with the experience that I have. I'm speculating. Tuesday is an ideal trading day, so I want to trade on Tuesday. I know Japanese yen is getting weaker. I know Canadian dollar is definitely better. Bank of Canada has a higher interest rate. So nobody wants yen. They want Canadian dollar. See what happens the next day. Oh, set. We got another down day. Cool. Now you can see how when I show traders, when I get into the trade long, let's say this candle did go up. Of course, it looks like I'm a genius. You know what I mean? It looks like, oh wow, Deontay, how did you know that? I'm just taking a guess. I could be totally wrong. Dude, no, I lose trades too, guys. I lose money too. As much as I could be up $20,000. I could be down $20,000. I could be down $10,000. I could be down 5,000. I could be down $500. I could be down that amount too. Doesn't matter. At times, if I'm feeling, you know, that things are lining up and I got the edge and I think that this is going to be the day to go, I would go long, right? Where am I going long? Below the weekly opening price, below London opening price, below New York opening price. The same ideas that I just showed you intraday from the weekly range review is the same thing I'm applying here when I'm trying to anticipate the swing formations. Hopefully that's clicking for some of you guys. That's at time where I tell you all the time, just wait for the confirmation because you're better off waiting for the confirmation. Because when you try to guess, you could be guessing wrong and you could go into a world of pain. Trade it forward. Boom. Wednesday, large range cycle. Look at the same thing that we're talking about in the previous topic. Small range, large range, small, large. Happens where? Wednesday. Purge on Monday's low, revert on Tuesday's high. That's what a swing low is. It's a purge on sell side and then a revert back to buy side. That is what the true definition of a swing low formation is. A swing low formation is a purge first on sell side and a revert back to buy side. And it's doing it here via 3 bars in 3 days. Tuesday purges Monday's low, Wednesday reverts back to Tuesday's high. Wow. Right? These ideas are so fractal, guys. So fractal. The same thing right over here. 1 minute. The same thing that's happening here, it's just being shown on the daily time frame with a lot more data. Purge buy side, go back down to sell side. No different. It's no different what is being shown here on the daily. Purge sell side, revert back to buy side above the high. Swing low, higher swing low. At this point, when I get this higher swing low, there are two things I can do. You be the decider because I can't pick for you. You pick what you want. So yes, here we go. Yes, higher swing low forms. Now here comes the confidence now, right? We're confident. Okay, CAD is most likely going to be bullish for January. Continue trending. It's also in a premium too. I'm going to point that out. It's in a premium for the month of January. So you can see this is exactly what I was talking about. You will be forced to buy in a premium. That doesn't mean you have to sit here and sell the whole time it's in a premium. No. The higher time frame trend is saying it's going to go higher, so we have to listen to it, regardless of where it is in price action. Yes, it's in a premium, and it could give great selling opportunities once in a while because it's so expensive. But the higher time frame trend is telling you that it's going to go higher, so you're going to be forced to buy in a premium. Yes, the higher swing low forms. What's the next step? What's the next step? The next step that I would do, first step, look to buy after down days. This is the most simplest idea that I can give any trader. This piece of advice here puts you light years ahead of retail traders because this is where you start looking like the fortune teller. Look to buy after down days. The second thing I would do, I would look to buy every day going forward after the higher swing lows form. Every day going forward, I'm looking for buy opportunities every day. Now I'm just generalizing and being very broad. If you want to be very specific and niched, I would tell you buy on Tuesdays, buy on Wednesdays, and buy on Thursdays. Done deal, right? You could do that. Buy on Tuesday, Wednesday, and Thursday. Two ways you can go about it. You could be looking to be a buyer every single day now, just targeting buy side liquidity. What could you be targeting? Just look back. Look back, guys. Look on the left side of your chart. Where's the liquidity pools residing? Swing highs. People ask me, what's the draw? Come on, guys. It's right there. It's even creating short-term draws for itself too inside the month. Look at that swing high it made right there. The market creates liquidity pools to raid them. Look at all these swing highs. I would look for longs towards these levels. Not a hard thing to conceptualize or to grasp. I'm looking to target buy side liquidity, or I'm looking for price to target previous daily high. So this Wednesday high, Thursday, I want Thursday to take out this high. Thursday's high, I want to meet Friday to take out its high. Monday, I want to see Monday take out its high, etc., etc., etc. Many ways you could go about it. I just want to show you different ways. I don't want to say one is better than the other. Pick what you would like. I like simplicity, so I'm gonna go with what? Wait for after the down days. Down day on a Thursday. Cool. Can I look to go long on Friday? Yes, you can. Do we have a fair value gap here too that we can see here? Yes, we can. So would I use this to my advantage? Yes, I can. I could use that. Can I scale down to the 1 hour? Scale down to the 4 hour and see what happens here? Let's play it forward. Price trades down into it. So it's another down day. Let's say we take a loser buying after this down day. It's cool. We're cool with that. Now, question is, where are we looking for our setup long? Like I said, I have a video on this too. It's called this one here. It's right here in this video. It literally says it right here. Entry techniques for swing traders. It's right in this video. Using limit and stop orders. How would I go long on this candle here? It's not one I would take personally because we're going into Friday. But from a conceptual standpoint here, long here. Because what are you doing? You're buying on at the close and you're buying at the open. So you're placing a buy limit here, buying on weakness. So meaning the next candle that opens and knocks you in long on weakness. And you're hoping and anticipating that it would also knock you in on strength. Now, my preferred method would be buying at the low first, obviously. Buying up here could pull you into a lot more drawdown because sometimes the candle will. Some things I've learned over the years. Okay, you're in long, knocks you in, great, and then the candle is going up, 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 and it runs. Sometimes if it really is going to take off and it's in a large range cycle, it'll blast off. It'll do something like that. At times it won't. At times it'll go up here and then retrace back down into here, and you'll be in a lot more drawdown. So I prefer, and I'm telling you what I prefer. I prefer using the buy limit, not the buy stop. Really, the buy stop because you're buying at a higher price. I really want to buy at the lowest price possible, and that's when that next daily candle opens. I set my order here. That doesn't mean the order may be triggered in a kill zone. That order might be triggered outside of a kill zone. It might be triggered most likely during the New York lunch session. And that's where I would go long. And we'll play it forward. Down day, same thing. I'm looking for what? Here, buy here, buy here. Here. Where would the stop loss be? Some people may ask. This was a tricky one. Now, if you're trading it off the daily time frame, your stop loss will have to be under the most recent swing low that we have. The most recent swing low that we have in the last 20 days from the current day that you're trading on, you're trying to look for go long, you're looking for this to be your protection. Because if it's going to go higher, it's going to protect this swing low. Logic, right? That's logically sound. If it's going to continue going higher, it's not going to want to run this swing low. It's less likely. Less likely. Not saying it's not possible. It's less likely. We would look to go long there. And then our TP would be some type of swing high or some type of specific pip number, right? Anywhere from 100 pips, 200 pips, because it's more of a swing. Looking for large bang for buck. Next day, up, right? This one happens to be a very good example because you get little to no drawdown on the entry here. So price hits it, knocks you in here because it doesn't pull back, and it runs higher. in this method too, what is it also doing? Let's not get lost from what we're talking about because I like to stick to one thing at a time, but many people want to say, "Oh, but what about this? What about this? What about that?" You got to be concise first. We need to understand what's going on first before we can talk entries. Because some of this stuff, when you blend it, some people are not going to comprehend it as easy as other people have. So we got to take our time. What are we doing here? We're also creating higher swing lows right there and here. So this is that higher swing low. Yes, a higher swing low forms because that's the higher one. 1, 2, 3. It's higher than this one. 1, 2, 3. Notice as well, it created a swing low below January's open. This is a characteristic to a bullish month. You'll start to notice this when you're trading or you go back and look at any bullish month. Go on the monthly chart, pick a month that was in a large range cycle, even if it's small, but pick a month that was in a large range cycle. Go down to the daily chart. I guarantee you're going to see multiple, if not at least one swing low below January, below the monthly open price. If not, at least one. Price trades higher. What is this? It's most likely creating what? A higher swing low again. You buy after that down day. Boom. Let's go to the next day. And then look, here it comes, right? Here comes the swing trading idea. Everybody keeps asking me, how are you swinging, God? How are you swinging, Deontay? Right? From the daily time frame, at least. How are you swinging? Just like this. Let's go down on Monday, right? After this down day. Right? Let's go down to Monday. Let's go down to 15-minute time frame. Boom. See, this is why I don't like this because it starts to get then things start to get messy. 15-minute time frame. We're going into right here. Midnight. Play it forward. And that doesn't mean there isn't also an Asian session. No, it's Friday. Can't even say Asian session here because it should have been Thursday. But Monday. Here. Monday comes in. Midnight opening price. Look at that. Midnight opening price. Right, you're looking to go long after a down day, intraday. You're in a 15-minute time frame. Let's go to London. Right here, 2 a.m. Right, the same ideas that I'm telling you to use is what I use, guys. It's not that I'm using anything different to try and go long the next day. Follow me here. Follow me here. Swing low. Swing low. Look at that. Swing low. So if I'm looking to go long and answer this, I want anybody in the chat answer this. Already from the daily time frame, we took the stance that we got a higher swing low. We got a down candle. We're looking to trade the next day. We're intraday. If I'm going to trade London session for a long setup, what should I be using to support my longs based on liquidity pools? What should I be wanting the market to give me? Doesn't mean it has to give it to me, but what would I want the market to do going into London? Depending on liquidity pools. I know it's a funny question, but try your best to answer the question. Anybody in the chat? I'll give you a few moments. I'll give you maybe 10 seconds. 10, 9, 8, 7, 6, 5, 4, 3. Thank you, Lenny. Whew. Saving grace here, man. Someone's paying attention. Lenny, good answer. That's the answer I was looking for. Attacking highs and respecting lower lows. Correct, too. But I said the question was, what would I look for to support a trade idea? I wanted to take out lows first. There we go. That's a good answer, too. I wanted to take out lows first. I want to see some type of sweep of sell side liquidity so I can go long. Period. That's it. I'm trying to use the model in the direction I would want the higher time frame trend to go. So let's look at London. We got 2 a.m. opening price here. Now to see, it's a lot of lines. So if you're not following, it can get a little tricky. That's why I like to color code it a little bit. Sell side. Oh, you guys got to turn blue. Sell side. And then we got no swing high here. right, that we can take. We'll take this here. Buy side. Cool. Play it forward. See what happens. Boom. Price comes down. It goes right there down to 2 a.m.'s opening price. Have you taken out any buy side and sell side liquidity via 15? No. Maybe 5 minute potentially. Because I told you guys, you don't have to just use the 15-minute time frame for your liquidity pools. You can also be using the 5 minute. I just personally stick to the 15 minute. Play it forward again. Play it forward. Boom. There we go. Action. Now we got action. Now here comes the swing trade opportunity here that I'm looking for. Because the daily, we've already progressed. Swing high broken, higher swing low. We got a down close day. Intraday, we're looking for a setup to go long. It's a Monday. Let's just excuse that, by the way. It's a Monday. But let's just stand forward with what we're talking about here. It's a Monday. We're looking for a London session setup to go long. Okay? Sell side liquidity is rated. Great. We're below 7 a.m.'s opening price. That's awesome. We're also below. We at one point in time we were below midnight opening price here, right? That's another factor as well. And then we even have Sunday's opening price. We're above Sunday's opening price. So a little disagreement with the confluences here with the openings. But hey, like I said, sometimes you will be forced on the weekly time frame, the weekly range to buy in a premium. There's nothing you can do about it. Nothing you can do about it at times. So I'm looking for a long setup during the London session. Swing lows broken. Let's go down to the 1 minute. We're on CAD too, by the way. CAD. See, do we get a fair value gap that breaks a swing high? Close. This was very close. Like I said, I'm gonna keep studying these things like this, these nuances like this. Like the fair value gap looks like it wanted to run through this swing high, but it just didn't. If this candle just didn't fill in a little less, if it left this open a little more, this swing high would have been ran by that speed. But instead it covers ground, which is cool. So these are little nuances that I'd like to study. And I think that sooner or later I will make a decision to include the entry scenarios that look very similar to the one I like. So we're below 2 a.m.'s opening price. We're below midnight opening price. We're still above premium for the weekly open, which is okay. Sell side raid, sell side raid. Notice how they get traders to go long. Huge pull down, right? Huge pull down. We just talked about this. Retail traders start the session. You don't want to start the session. We don't want to just jump in here and say go long. Sometimes it works, guys. I'm not saying it doesn't. Sometimes taking that randomness stance and being, someone that chases, it does work sometimes. Because London couldn't do that and then continue going higher. And those traders can, act as if they did something magical when they really didn't. Boom, comes down. Now we're looking to go long. Everybody's in drawdown now. Anybody that went long, drawdown. If they didn't close out their trade, drawdown. They're definitely revenge trading too. Think about how these traders are thinking, or how you used to trade as well. It's long, and then it puts you in drawdown. Man, I could stack another long here. I could stack another long here, another long here. By the time price gets down to your original entry, man, you're down like 6%, and you're still not closing the trade because you really think it's gonna come back. You better cut those losses, man. Try again. Sell side taken. Let's play it forward. Still playing. See if we get an entry technique below the open. Let's see if we get one. I'm just looking. Not saying I know if it is going to give me one. I don't know. I have no idea. Boom. See, let's double check. We don't. We don't get a good discount buying opportunity here. Now, with other ideologies, yes, we can. Other methods, yes. I see other entry techniques that we could have used here to go along. The one I'm looking for specifically did not form. So it's okay. But just looking at it conceptually, there look at how you would find the trade idea to go long for London for Monday. Now let's go back. Now let's play it to New York session. Well, New York might give you another opportunity too. played all the way through. 7 a.m. comes around. Ooh. Mm. Sheesh. New York session really played with everybody there on a Monday, man. Man, what a New York session to trade. Runs all the way up here, comes down. You can see there the best sell opportunity here. Mm. Back into it. Get out of there. That's your breaker. Um, but yeah, London looks like it was setting you up. Pivotal moment here. This is what we said earlier in the channel, in the chat tonight. We said that the sevens, London, New York, or Asian session will be pivotal moments to the higher time frame trend. That's really it, guys. Stop making it so complicated. You found the trend, great, good job. Now, if you're a day trader, you're looking for intraday trades. How long do you plan to teach? How long? How long you have planned to teach in video? Rephrase that question. I'm not sure what you mean. I'm not sure if you meant like in general. How long do I plan to teach trading? Probably for the next 5 years. After that, I'm done. This video talking about tonight. I'm probably till we get to the last topic, my friend. We ain't stopping until I'm up to the last topic. These videos are long. This is why it's called Forex Fridays. Let's go back to the daily now. I gotta get rid of all this on the chart though, because all that stuff is gonna be on my chart on the daily time frame. Go back to the daily. I'm not sure what this is. Go back to the dailies. That London. You ever consider a 5 minute CISD? No. No. Have you? So London would have got you long for Monday here. You see that? London. That's where it starts. Boom. You're in long. This you already got the trend. You got into the trend. Oh, that's good. Keep back testing it, man. Let me know the results. You can share with me in my DMs or something. Price is trading higher. Look at that. Respect, fam, respect. I know. The time zones are funny, man. If only if we all lit, like, bro. Small little side note, my bad, y'all, because I know this video is long as hell, bro. Bro, I one day, this is my dream. This is something I dream. Hopefully, it becomes a reality. I will eventually have the funding to do something like this, and hopefully, I can link up with other traders with the same mindset that I really trust. I really do not trust a lot of people in the industry. I don't trust people, bro. Especially when it comes to big projects like that. When money is put up, bro, people be acting funny. One day, I would really love to meet people that are either in the Telegram channel or wherever they support me at, and we come together, we have a nice dinner, we talk about charts, we talk about our struggles, our this, how we became successful, even if people aren't successful and still working their way up. I would love for that to happen one day, bro. Like, amazing time, just good all around humbleness, loyalty, trustworthiness. Like, of course, it would only have to be with specific people, but that's a dream I have one day. Even here in New York, bro. Like, I live in New York. I don't know a lot of traders personally, like face to face. Like, I don't know nobody that trades like me face to face. I don't know nobody. There might be a lot of good traders in New York overall, but I personally do not know anybody here in New York that I can pick up the phone and say, "Yo, bro, you trying to go get a drink and talk about charts, bro?" Or, "Yo, pick up the phone, yo, bro, yo, I'm in the city. Come link me in the city, man. I'm about to like start charting up in a cafe or something. We could talk charts." I don't know nobody like that personally yet. But one day, um, yeah, very cool dream, bro. Like, I really want the best for people, bro. But then you get too trustworthy with some people, and I know the world is funny. People will double cross you, people will snake you, bro. And sometimes being very optimistic and being a nice guy can get you hurt. So I can only dream, and it can put me in danger. Somebody could want to do something to me or harm me. Look how price keeps trending higher. Look, higher, higher, higher. Where are we at? Buy side. Come on, guys. Come on, guys. We just showed you how we could potentially go long into a swing trade. Boom, we are long in London. We're holding for one day profit, another day profit, right? And each one of these days, like I said, you continue to look for buys. Buy on Tuesday, Wednesday, Thursday. Buy on Tuesday, below discount. Keep going. Buy on Wednesday, below discount. Keep going. Buy on Thursday, discount. Keep going. Look at that. Bro. From that one entry idea on London on Monday, we were able to get in sync with the market. Hopefully, this is answering crucial questions to a lot of people when they say, Deontay, how are you able to swing trade like that? I just showed you. Do the same thing for New York. Do the same thing for London again the next day and New York the next day, or even Asian session. I've showed at times Asian session is the pivotal point too. Just how London on Monday here makes this low and never gets back down lower and just continues trading higher, Asian session can do it too. New York session can do it too. We got a down day, right? We arrived to this. So for the traders that are waiting for the down day, might take a while. So you got to pick and choose what you like to do. Might take a while. But even then so this down day for the trader that waited for looking to buy after a down day, they are in profit too. 1, 2, 3, 4, 5 days profit. Come on. Down day. It closes up. Hypothetically, we'll say we took the winner, regardless of the wick down. Let's just say, just for the video's sake, hypothetically, let's say we took the winner, buying after a down day. Cool. Oops, 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 oops. Too fast. Way too fast. Down day. Okay, cool. You want to see what happens the next day? Let's see. Do we get it up? We do. So hypothetically, a winner the next day. Let's go to the next day. Winner. Next day. Down. Okay. Up. Winner. Come on, guys. Down. And let's say loser because it doesn't close. Yeah. So let's say we took a loser after buying after this down day. So you can see how simple the idea is. It's just all about framing the risk and how much you're going to put on. If you're going to be swing trading and you don't have a lot of capital, please risk small. You're going to have to risk small regardless because you're on the daily time frame looking for the entry technique. And the swing low that you're going to be placing your stop loss below might be really far. And if it is way out of arm's reach, then maybe not consider that as the swing trade that you take. Look at another pair. Or wait for a better opportunity to present itself where the risk is well within your means. Like I said before, we said that the swing points are going to be protected. Look at that. It never got back down to that swing low, that higher swing low. Look at how it started, guys. Swing high broken, boom. Let's bring it back. One more time. Now I'm gonna go through this a little quicker now because we should have already conceptualized the idea here. Swing high broken, boom. What did we wait for? Higher swing low. We got it. Confirmed. What are you gonna do? Either buy after down days or look to buy intraday below midnight opening price, Sunday's opening price, London opening price, New York opening price, and Asian session opening price. Buy in a discount, point blank period. Buy discount, buy cheap. Boom. Come on. And trading is complex? It's not. Be informed. I know it is complex when you're not informed, but when you start to get informed about these things, things come a little easier. It took me a while to understand this stuff. And some of the ideas that I'm showing you, I did not learn from paid mentorship. I didn't learn from paid mentorship. I learned a bulk of what I know from a larger standpoint came from free stuff off of YouTube, free ICT stuff, not even paid stuff. So for those that were like, I'm missing out. I'm missing out. I didn't get into the mentorship. I mean, now he's releasing all of it. And that's another conversation for another day. Dude's a businessman. Hey, do what you want to do, you know? But yeah, there you go. There you go. A bullish month. There you go. From January to February. That's your characteristic of a bullish trending month. We love months like that. We want to take advantage of trending environments. We love that. Let's keep going forward, right? Let's just play it forward all the way to where we are now. Look at that. Still trending higher. Do we get false raids? Yes, we do. We talked about that in the daily updates. We had a false raid for a lot of the yen crosses going into February. False break, boom, runs higher. There goes that swing low. And then there goes right after it, we get a higher swing low. Boom. Down candles. Come on. Come on. Buy after down candles. Look at that. Still trending. And it all started from me understanding this and this to potentially get rewards from this. Wow. 2 steps. But it takes patience. You can't just jump into here and say, yo, I know the trend. No, you don't. Because even when I think I know the trend, I get humbled too. I get it wrong too. You guys will see as the year progresses and we do the daily updates, right? Next month, like so far for AJ, Deontay looks like a hero, right? I look like a hero. People are like, oh my gosh, bro, you're calling AJ to the script. You know exactly where it's going to go. But then there are going to be times where Deontay does not look like a hero. And I don't look like I know what I'm talking about. I do know what I'm talking about. It's just that I got it wrong. I'm not no robot. I'm not gonna always get it right. I'm not the market maker. I wish I was. I wish I was. And that's KJ. Now let's look at GJ. Exactly. Correct. Same thing happening here. We're gonna keep it more simple. I'm not gonna write everything on the chart. Just some pointers. What is happening from 2024, the start of it? What is happening after those down days? Can anybody tell me what happens after the down days? What do you see? Not every single one, but just give me a general observation. Looking at this chart after the down days, guys. Anybody in the chat? What's happening after those down days? You guys are gonna get it right. I know you guys. I know whoever says it is gonna get it right. No, for sure. Correct. That too. Wow, look at that. Yeah, large bullish days. The answer simply was just bullish days. Expansions. Yes, buys. Correct. Exactly. Now you're telling me you can't utilize that? Tell me you can't utilize that. You can't use that as a filtering process. You can. And then you start to, I'm telling you, then you start to look like a fortune teller. Then you start to look like, oh my gosh, how do you know? How do you know that, Deontay? I didn't know. I didn't know. I just took an educated guess based on data because I don't trade with indicators. This is my indicator. The way my chart looks like, this is my indicator. The counter trend candles, that's my indicator, guys. That's an indicator. 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 Come on. The market's always been talking to you and trying to communicate with you. You need to be able to comprehend and translate what it's talking about. Let's go back. CAD-J and GJ are directly correlated. All the yen crosses are directly correlated. You guys know I was swing trading it, making some profit and everything on it, right? Here we go. What's that? Momentum. Bullish momentum. Not going to write everything out. Bullish momentum. After breaking that swing high, what happens? Let's use the replay function since I pay for it. So damn expensive. Tired of paying for stuff, man. Inflation and stuff. Like, bro. High swing low. 1, 2, 3. After this, in broad general sense, you're a buyer, guys. You're a buyer. Period. After getting this, you should be more confident in being a buyer. Until price breaks a swing low, then you can sit here and say, I think the trend is changing. Don't let that go over your head. Until price breaks a swing low, then you can sit here and say possibly we are going bearish. In the daily updates, whenever I said price broke a swing low, I said let's wait for let's wait for confirmation. Couple days later, price does not confirm the bearish confirmation. It actually goes back to breaking swing highs. And I say, "Oh, wow. I'm glad I didn't just jump in short. It was a false break." Play it forward, down day. Wow. Down day. Let's say we take the loser. Oh, it's cool. We take the loser. Also, another PDA right here. Fair value gap. Breaking through what? A swing high. Same technique on the 1 minute for London, New York, and Asian. My entry technique. It's just showing on the daily. Swing high broken with a fair value gap. Go long inside the fair value gap, guys. Winner. Now you start trending. You find some type of London, New York, or Asian session model to go in the direction of the trend. That's all you're looking for. And most likely it's going to give it to you, guys. It's not like it's not going to. It's going to give it to you. We go into some consolidation, which sucks. This sucks. Like this here sucks. This sucks. I'll be honest with you. What to do here in this scenario? You most likely would have to start looking for smaller setups, especially after the large range candle. So after this large range candle comes out, intraday, you should try to scale back on how much you're risking per trade and try to take partials as soon as possible. Whenever you can pay yourself, you pay yourself. As soon as we get out of that large range cycle again, oh, we're in February now. Yeah, we're done. That's pretty much where we are now. So I'm not surprised. At the end of the month, price started to stall up. You start to learn these things too. Monthly chart has its own cycle as well. It's so funny. The monthly chart has its own cycle as well. Second week of the month tends to be very volatile. That first week, I don't like trading the first week. Why don't I like trading the first week? One, NFP, because I know there's going to be some type of false move with NFP. If it's not a false move with NFP, NFP is showing the true direction of what the monthly candle wants to do. I've said that before. Now say it again. NFP, when the news drops for NFP and it takes off in that one direction, at times that direction is a telltale sign on where the market is going to go for the next couple weeks or for the entire rest of the month. If NFP shoots very fast to the upside, and following that, you don't get a strong retracement or reversal after that, everybody's most likely going to go long and be profitable. If not, it's a false break to the upside and price is going to reverse. And the same thing can be said vice versa. That second week of the month is where I like to really start to find the trades because you get a lot more data. You get to understand, okay, first week is done. Okay, it broke a swing high. Second week, can we start anticipating higher price action? Yes or no? Yes? Okay, let's start looking for longs. Notice again, this is the open. Notice how it created a swing low formation below the opening price for the month. It did it on purpose, guys. That's the characteristic for a bullish month. It creates at least one swing low below the open. And then it trades away from it. That swing low is protected. Runs up, creates a higher swing low. It's protected. Runs up, makes a higher swing low. It's protected. Runs away from it. New leg, new leg, new leg, new leg. Every single time. Next one, DXY. DXY has been trading very clean too. Let's go to January to February. Same thing. January runs up. It gets, let me see where the swing high is. It's right here. That's the swing high. What happens after the swing high is broken? Do we get a higher swing low? Yes, we do. There goes your higher swing low. you will get into moments and times where you need to just keep tracking the breaks of the swing points because eventually it's going to give way. It's going to tell you. It's going to tell you. Higher swing low. Price is trying to make another leg up. Look to buy. Higher swing low again. Look to buy. Price is still going up. Buy sell side raid. Right? This is sell stop. Here. Sell stop raid. Even another sell stop raid. This is another swing low here. Finally goes away again. Comes down, fails to break that low. Comes up, runs that low again. Look at that. Just keeps raiding sell side. And then finally, gone. Right? It's gone. Catches everybody off guard. Here. Gone. Just be on your P's and Q's about the swing points. AUD, USD. In recent time, it's a little more choppier. A lot more choppier. Reason I say it's a lot more choppier is because of the RBA, the Reserve Bank of Australia, and the Feds. They have a close interest rate, so it's a strong versus strong currency. So the likelihood of someone converting their Australian dollars to US dollars might be less likely, right? It might be less likely because both fiat currencies have strong interest rates, which means higher bond yields, which means investors are, wanting to participate in holding that fiat currency. So those that have Australian dollar will be less hesitant, will be more hesitant, sorry, would be more hesitant to convert their Australian dollars to DXY versus Australian dollars to Japanese yen or vice versa. They're not people are converting their yen right into Australian dollars, right into dollars. But when it comes to people converting their Aussie dollars to dollars, they might be hesitant on it because they're both almost evenly equivalent in interest rates. And I'm not talking about just the price action solely. I'm talking about in interest rates. So it's a little more choppy looking. That's why you see the yen crosses are just moving like butter right now, man. And I've been trying to tell you guys, hey, focus on the things that are less conflicting. It's it's natural to trade a strong versus weak currency and see the PDA just move really smoothly. The most recent swing low, shoot, we don't even got a swing low broken in recent time going into January. You get one here, very late. So a lot of people were struggling trading AU, GU, NU was moving pretty clean. Honestly, I took a trade there. I was able to capitalize on it, but AU, GU, EU were moving a little funny. Like I said, the rates are just too evenly matched. Sooner or later, we're going to hear about the year what these central banks are going to do with their interest rates. They have to move them. They have to cut them. And the reason I say they have to cut them is because the higher the rates stay, the higher unemployment is going to occur. The margins of businesses are going to shrink. Payroll is not going to be made. They're going to cut back and fire people. As much as they keep saying job demand is high, it's high for sure. But if you keep the interest rates high and you keep it high and for longer, a lot more people are going to be unemployed. A lot more people are going to lose their jobs. The rates are just too high. And you think people want to pay high rates? No, they don't. So people are going to lose their jobs. So until they start cutting the rates again, then unemployment will decline and employment is going to increase much more dramatically. Swing low broken. What are we waiting for? A lower swing high here. Actually, it was right here. Choppy. Look at this. It's just choppy. Disgusting. Just choppy. And I say, hey, you want to pick a pair that's strong versus strong? Go ahead, be your guest. You're only fighting yourself. But nobody wanted to listen to me when I said, hey, focus on the yen crosses. They're most likely going to be a lot more easier to trade and move with dynamic price action. You keep trading these majors right now, and the current monetary policy that we have amongst all these central banks around the world, you're gonna have difficulties, guys. I don't make the rules. I follow them though. Play it forward. A lot of raids, and it finally trends out. But that's so choppy, guys. Choppy. Why are you putting yourself through this? Look at AJ, man. Clean. Much cleaner. Not drastically cleaner, but in recent time, clean. It's starting to get going, man. Starting to get going. Instead of doing this, go back. Instead of doing all of this, come on. I'll pass on this every time. I'm not trading the majors. I'm personally not going to be trading the majors for a very long time. Personally, I just don't see. I see the benefit of it. Yes, you can make money off it. Yes, there will be trade setups. Yes, there will be legs. There'll be swing points. But why pick things that are just why pick something that is not the pinnacle of what the current standpoint or the current realm of the world is right now? The yen crosses are going to be the best pairs to trade right now, and nobody can tell me different. And that's basically our daily tracking. That's our daily tracking. That's our Forex Fridays. If you have any questions, let me know. We did talk a lot and did ramble about certain things, but all in all, we still mean business. We still are here to make money. We're here to be successful. We're here to be informed. We're here to spread the information to other people as well. I want other people to know this too. I don't care how many subscribers I have. Bro, I could go back down to one subscriber. I'm glad that one person is getting this information, bro. Yeah, we're here to learn. That's it. I'm still learning too. I'm not perfect, guys. I want you guys to study, 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 study. I spent thousands of hours already looking at charts, bro. Thousands. Years, bro. I've done it, bro. I've done it. I put the work in. And slowly but surely, a couple years start going by. Oh, you break another barrier. You start becoming profitable, right? Or you start to see, oh wow, I can actually start to cut. I can actually potentially, right, quit my job. Woohoo! Not saying it's the bad thing or a good thing, because like trust and believe, bro. If you're a doctor, a lawyer, a mechanic, bro, we need you in society, bro. If you're a farmer and stuff, we need you in society. But if you can supplementally get some type of income from trading, from very simplistic ideas, try your best at it. That's why I like the Asian session model, because I think at least for people that have full-time jobs or any type of model that I have, those people that have full-time jobs can use this as supplemental income part-time. You know, they only need to spend, even if they have the most boringest life ever, at least you use your time to pay you back, instead of just sitting in the house, after you get home from work and you're just binging Netflix and binging and doom scrolling on Instagram and looking at this next girl and stalking this girl's page. Bro, do something productive with your time, dog. You know, do something. People are addicted to their phones, bro. Be addicted to making money after you get off of work. You're so loyal. People are so loyal to their job and their bosses and their higher ups or whatever, their managers and whatever. So loyal. Yes, ma'am. Yes, sir. Yes, this. But when it comes to you, you sell yourself short. Why? Why, bro? You think I would ever sell myself short? No, bro. I'm betting myself every time, bro. Besides what I got going on outside of trading. I gotta show up here every night. Asian session model. Boom, D's in here. I gotta be watching the swing points, daily tracking. I'm in here. I make the time. I make the time. What do you think? When do you get to hold your Asian session trades longer? Isn't it bias? Bias one and statistical data. Said this before. The data shows that on certain days I can hold longer. Tuesdays and Thursdays. Let's bring up the data chart. Let's bring it out. I haven't updated in a while. Let's bring it out. Let's bring up the spreadsheet because we want to be methodical. Spreadsheet. Am I on the right account? I think I am on the right account. Yes, I am. 2024 Asian session model tracking. Let's just look at January. January was fantastic for the model. Fantastic, right? Just great. Look at the days where the market gave a lot more than we really wanted. 1 to 1, 15 pips. Look at this Tuesday. Bro, unrealized gains 691 pips, bro. That was basically almost that was the low. That was the low of the month basically, or the pivotal month, probably pivotal month. The pivotal session for the entire month, right? That one Asian session was the pivotal session. Now, did I know that that Asian session was going to be pivotal? No. But I could take an educated guess that Tuesday could potentially give me more reward than I'm looking for. 15 pips is normally what I look for. Ideally, I would like to see 40 pips. That's a fantastic job. Fantastic, right? Cherry on the top. 40 pips, great. But the data has showed that on certain days, I'm highly rewarded. Tuesdays and Thursdays in particular. Let's look at the next Tuesday. Next Tuesday, stop loss. We took a 15 pip stop loss. I've also noticed UJ's thus more successful. Yes, correct. Correct, fam. The 15-minute order flow. I don't know what it is. I don't know how I really wish I was recording myself and documenting like the whole process of me figuring out this model, but I didn't. But for some reason, something or someone told me start on the 15-minute time frame, then go down to the lower time frame. I don't know what told me to do it. It just clicked. Hey, it's here now, so let's utilize it. Thursday, look at Thursday. Thursday, 10, 15, 20, 25, 30, 35, 40, and then the max before it hits stop loss, like ever comes back down, 48 pips. This trade right here on Tuesday, the 2nd, this trade still didn't hit stop loss. I want you guys to know that too. Of course, I said I'm not going to keep tracking the gains, of course. It was just until the end of the month. But this session on the 2nd of the year, this model technically is on unrealized gains. This is probably over 1,000 pips up right now, just off of this one entry idea. It's crazy to me. This one too. This one happened on a Monday. Very interesting. I do see sometimes like it will happen on a Monday. Very interesting. Next Tuesday, stop loss. Hey, it is what it is. Next Thursday, look at Thursday. 10, 15 gives you more than 15, gives you 20. Cool. Next Tuesday, this Tuesday, only 15. Interesting. This Monday too. Look, Monday, 134 pips. So I'm still learning. Like I said, the model is still freshly new, at least to what I'm bringing to the community. It's still new, but I'm trying to analyze the data as we go on month by month. So far, it's been rocky for February. I'm not up to date with tracking it right now, as you can see. I have to fill that in, and I will over the weekend. But data, my friend, data. That's all it is. We don't know this stuff unless we know data, anecdotal data. So hopefully that answers your question. We can't just be out here randomly trading. We need data. So if nobody's gonna back test it, I will. And yo, man, shout out to this dude, bro. This guy back tested almost a full year of Asian session model, bro. The model is literally almost like 80% accurate. 70 to 80% accurate. Obviously, month by month it will change, but the model overall is like 70 to 80% accurate. It's crazy. It's a crazy model. If there's any other questions, please let me know because it is now 12:22 a.m. here. It is now Saturday. It's not Friday anymore. It's Saturday. I should be sleeping. And Yeah, let's get to it, man. Hopefully, you guys enjoyed and learned a lot tonight. And just, I'm just trying to reinforce the same ideas every Friday. Reinforce, reinforce, reinforce. Successful traders do the same thing over and over and over again. I do not change what I do for nobody. I do not. I do not. People will sit here and text me, "Oh, but what about this? What about this?" That's cool and all, but I already got something that's working for me, so I ain't changing it for nobody. I found profitability doing it this way, so I'm gonna keep doing it this way. As soon as I start taking someone else's advice or taking someone else's trades, and I lose, I'm gonna be upset because I have myself to blame. I have my own self to blame. So stay focused. The most successful traders in the world are consistent to one model, consistent to a few entry ideas, consistent to a few pairs, or selection of pairs. They have checks and processes. They are not randomly picking a pair every month to trade. They are not randomly getting in at any time of the day. They are very methodical. And also, very most important, the most successful traders think differently than the rest. I I notice it in myself, right? I notice it in my own self. I think very different to what most people would think when it comes to trading, bro. I know that. You know how I know that? Just based on some of the conversations I have with other people that trade. My mindset is completely different to how other people comprehend the market. There are a few people that definitely agree with me and see it from my point of view before, they've met me or known what I was talking about. They've already arrived to the same conclusion as me. But for those that have not arrived to the same side or the same mountain as me, we on two different pages. I tell you this, you tell me that, and I could already see we don't think the same. The successful traders in the world so different, bro. They don't think like the average norm person, bro. They think 10 steps ahead of everybody. Hopefully this was insightful. Peace.